Good morning, everyone, and also good afternoon and good evening to viewers around the world. My name's Tim Fairweather, and I'm going to be hosting the first part of this Books Price Action webinar today. We've got 3 traders for you today. I'm going to kick off until about 11, and then Tim Stout is going to come on to take you through the middle of the session, and then Brad Wolf is going to finish the day off for you guys. So it's a free session today, a bit of an open day, which means we've got lots of new people, and some of you might be very familiar with the course material from our books, some maybe not so, but you're welcome to ask questions in the Discord. So just make sure you're on the trading room chat. If you want to tag me for a question, please just put my name in there, and I'll do my best to get some of those questions. We've also got Rose in the room as well. He'll be supervising, I'm sure. So we had FOMC yesterday, and I was in the room yesterday, and we had interesting couple of targets. So if you're having trouble getting into the link, I'm sure Ken will help you get in there. Just get the hashtag for setup. So new month, first of the month, and we're in a bull trend on the higher time frame, and I'll just run through a little bit of the higher time frame, and we'll kick it into yesterday as well. So we're in a bull trend. We've had a couple of legs up, and this is the first time that we've had a bull bar that hasn't closed above the high of a prior bar. So it's signaling that a lot of traders are looking at, a lot of the bulls are looking at taking profits, or an area where they're wondering how far it's still going up. So we've triggered buyers above that bar. So I'm assuming in a bull trend, there are traders buying the highs, and that they'll usually be able to avoid a loss. So I've actually got a line there for the highest high one, because I want to see what happens today. We're opening around that price. So if I buy that bar, and then this is my entry bar, how do I feel about buying so far away from the moving average and swing points? See what happens. So start of the month. Now we're nearly at the end of the week, and we've had consecutive bear bars on the weekly chart. Just 1 second. I'm in the, someone's saying the link's not working, but I can see there's a lot of attendees. Yep, so the link's definitely working. But they're in the room, so I can't talk to them here. There we go. Just tag, just 1 second. Tag Ken. Nice. Okay. So if you're a bear, you've had kind of the third attempt at reversal. We triggered a bear bar once, twice, 3 times. Bears managed to get not quite 1-to-1. They sold the close or sold below that low, and that's expected because we're in a tight bull channel, possibly parabolic wedge, 1, pause, 2, pause, 3. And we expected there to be buyers around the moving average, and around these highs. Bulls, of course, want to keep a gap open, which is going to create a layer of support to go and test those highs. So you can see that line on the monthly. I've just got that on the chart because I think that'll be interesting today to see what happens. And we've had a couple of, strong sell-offs on the weekly chart, 2 bars into 3, and then second legs and third legs. But this, I think the bears want to do a little bit more. So it's not really a great area for bears to sell down here, but now the bears have managed to move the price, 280 points. Now it might be more interesting for those bears to say, well, if I'm going to have a shot at a low probability trade, I want to do it with a smaller risk and a bigger potential reward, as opposed to selling here where you're saying, oh yeah, I'm going to get a 1-to-1, but it's not a high probability trade there. Does that make sense? So weekly chart, if I'm a bull, where do I want to get to? Well, the same logic on the high ones. If you're buying above bull bars, that's not so strong, so you probably wouldn't use that. If you bought this bar, that's your entry bar, you're feeling pretty good. Then you get that bar and thinking, well, I'm not too happy about that long. You've got a chance to get out. So I'm assuming that those bulls are potentially out, waiting for a couple legs sideways to down, maybe to buy again. So at the moment, we've got an inside bar, which is 50-50. Oh, thanks, CPOD. Makes sense. So this is forming a triangle. We can get a trusty little triangle drawing tool. So triangle means breakout mode, and in the course, a lot of price action trading material, traders are looking to see what happens above and below bars. And when you have an inside bar, it creates this triangle shape, which is no one's willing to push the price up to a new high, no one's willing to push it down to a new low, everyone's scalping, and at some point the volatility squeezes until it rockets out of there. So it's usually better to wait for the breakout and follow through and then take that secondary trade. So on the daily chart, we've got an interesting pattern here. We've had bears. This is the RTH chart, so the regular trading hours. We've got bears down here, and then immediately it takes off. Sorry, that's the RTH chart. Bear bar down here, bears not able to get a new low, so they had a potential double top bear flag, they had a gap, they had lots of good things going for the short down here, except you can see something happened with this bar. Can anyone tell me what was interesting about this bar? Something happened before it, during, afterwards. And if you can start to pick up these little subtleties, it's going to help you to manage trades and to get into good trades. It's not an outside bar. It did gap up, pull back to the midpoint. Yeah, these are all good. There's one key thing I'm looking for here. Everyone's getting all the kind of more advanced stuff. That's not related. Okay, maybe we're not getting it. That's okay. So if I'm a bear and I sell below that bar, how am I feeling about my entry bar? I'm feeling pretty good. If I sell this bar, what happened? Well, I'm unable to sell one tick below that low because we never dipped there. And someone said, well, we actually gapped up immediately. That's right. So if I'm a bear, I want bears to continue to sell lower than my price because we're going to make money down below. And so when you stop making new lows, we get an inside bar. These traders, how are they feeling about their trade? They're not feeling too good. And what happens is you get this kind of domino effect is you've got these bears here who are looking, saying, well, if we start breaking far back up into the price of this bar, rather than letting my stop get hit, do I get back out at break even? Do I stay in, scale, get out? Do I stay in? And so that's the sign that this is not behaving like a bear trend usually would. It's getting breakout and follow through, but it's pulling back. And what happens is it pulls back right to let all those traders back out. There's no more bears to sell, and then we rock it up. Now, that doesn't mean that you should always place a buy order there, but it's a good opportunity to see how the strength is changing. Now we've come back up to the high of that bear bar, so anyone that was still short in here, how are they feeling about that sell? They might be thinking, well, that's a bit of a strong pullback. If I'm of the belief that that's going to be a measured move down, then my stop's not here, my stop's much higher. But now that we've filled that gap, it's behaving more like a trading range, weak bear bar, strong bull bar. So it's not doing the things you'd expect in a trend. So I'm expecting this to behave more like a trading range. So let's look at the ETH chart. Now, if you're not familiar with some of the concepts that I'm talking about, please just put a message in the chat and we can go through them. So on 60-minute charts, we had a lot of tests at this price range, 55.33, and then we broke above it. And we didn't really test it too strongly on the way back up. And usually when the market's in a trading range, you know, you can basically put the line wherever, and it's going to make sense for some of the bars and not all of them. So I have that there just as a guide to say, well, that was a strong range. Are we going to break out and test, or are we going to go a little bit higher? The bulls had a really strong move in the overnight session coming into yesterday, and my prediction was, well, if this is a parabolic wedge, then we need to go higher until bears stop making profits, and until we need to keep going higher until bulls stop making profits, and bears are able to trigger sell signals. And it wasn't until the bears could actually get some sell signals triggered by going below it that we started to go sideways. So if that's a parabolic wedge, expecting two legs sideways and then continuation is the possibility. But now you've got a pattern that was common on the weekly. You've got these 3 strong bear bars. So we're in a trading range here, and is at the top, is at the bottom. It's a little bit more confusing. I think this is strong enough to prevent bulls from buying too high. They're probably going to wait to come back to the moving average. You can see we didn't close above that bull bar. That looks like it got 1-to-1. So generally when traders take really good-looking signals like this, that's usually a swing buy. And you can see a lot of traders exiting at 1-to-1. So I'm expecting more of a trading range in here, at least into the open. So yesterday, interesting day, we had a huge gap up, right? So nearly 100 points. And the highest probability thing is to expect a trading range. And you also expect that because if I'm buying here, my stop is miles away. So bulls need a higher low in order to buy. And so we have a bear bar doesn't get followed through, bear bar doesn't get followed through. And so we've got this small trading range. And I thought it was interesting because I wanted a good buy signal. I didn't get it, but I also knew the bears hadn't triggered a sell. So I've got to give that extra 5% probability to the bulls. And then I ended up buying on a pullback test and then on 8-9, betting that's probably going to get a measured move, at least the size of that range, maybe to the 1 high, maybe from the 7 high up to that area. We came back and tested and had a gap, and then we had this really great looking buy signal on 18, which was, if you put your stop down here, you bought 18 and your target was the high of last month, where that high 1 was. Now I had to go to bed during this time, so you end up missing those, but I was able to take a few scalps in here. I think a lot of you would have gotten that because the target was fairly obvious. I think in the we had these 2 magnets and the bears just weren't doing much, and then particularly when you see 51, and then 51 was another classic. So up to that point, you've got spike, pull back into a 2-to-1 area, and then swing up to the target. And that's a really common pattern. So it's a leg 1, pull back leg 2, and it often has that 50% pullback into a range. And so you can time your entries to kind of increase your risk reward that way. It's also quite forgiving if you got a bit aggressive to sell early in the day. So, if you're looking to sell 1-3, I think, because it's such a strong gap up, I think it's tough to sell anything here. But let's say you sold, or you sold the double top, 1, 2, 3, 4, 5, 6, 7. At some point, you need to reverse to long after 7 bull bars, right? And one of the great things about price action is if you are patient, that sell that didn't work actually turned into a great place to buy. So if you're short and you get a strong bull breakout bar, you're above the moving average, you're above the 200, you want to gap up, everything's bullish, then you've got a chance to enter back where you took that loss, and then you would have made your loss back. Even if you bought 13, you didn't really have to stress too much. If your stop's down there, you never even had a 50% pullback. Some traders might get out at 15, but then you've got to be able to buy again when you get another good signal. So you can buy 18, test to the high. If you did anything in here, it was a little bit thin. And that's usually when you've had 3 pushes up. So the gap is 1. That's leg 1. And then this is leg 2. And then by the time you've got 3 clear legs, this is really common. So you expect a bit of sideways in the middle of the day. And if the bears don't get too far below the moving average, you're expecting trend resumption in the afternoon. A little bit different because we had FOMC, but still I think reasonable to predict. Just looking at some questions. Type of channel. So first thing I'm looking for in targets, I'm looking for daily measured moves. So I'm looking to see, okay, well, what was a day's range? And we're on the RTH. So this was a day down here. So a measured move of that entire day would be up here, right? that's because the market's fractal and we're looking at targets on all the different time frames. There might be a variety of different targets there, but that's the one that makes the sense on that. To me, that's lower high. This itself is a couple of different days. So I have that target, I think on the ETH. We are not there yet. Okay, so I don't want to have too many targets on the chart just yet. We had a move down, a push up, open gaps, and I think we're filling those gaps. Usually when you break out of a channel like this, there's a strong test back to that channel, and that test can be very deep. You can create a wedge bottom and create that major trend reversal. But we kind of rocketed up and didn't do too much testing there. We've only tested that once, so wouldn't be surprised if we come back down to 55.34 or lower. This was a lot of bear bars below the moving average, a lot of time below the 200, so I'm expecting this to more form a trading range. Overnight chart. So really tight bull channel. And if you're not sure where the channel line goes, just use the moving average. We've broken that channel line and we're testing up here. So if I'm a bull, I prefer to see there be a strong breakout follow through and then buy up here for some kind of a measured move, some kind of targets a bit higher, maybe the target's that range. And if I'm bearish, I've got to be careful selling too low around here, if that makes sense. Hi, Paul. Hi, Rory. Here's a Paul. Could you explain your daily bar question again? What was my daily bar question? I have a good question. Thanks, Rose. She was fast. I told you she's in the chat. She's keeping everyone in line here. So this is a bear bar. Everyone can see that. This is a sell signal. It's just lurking. So this is a sell signal, but we've broken above that sell signal. So if I'm a bull, I really want to buy above a bull bar. But now we've broken strongly above this kind of tight range. And so it's creating targets back up here, that 56.40 area, but it's not a great buy signal. And that makes me think there's probably bears who are scaling in here, maybe selling here, because if you're selling in this area, your stop's up here or it's higher. All right, your stop's not going to be in this area. It's not going to make sense. So I'm not convinced that we go above this bar and all of a sudden everyone hits buy the market. I suspect we might have to come down a little bit lower. And it makes sense because where's my target? Okay, well, if my target's a new high, 5,700, I'm at 1-to-1. 1-to-1 means high probability trade. But if we're below the moving average and there's a bull doji at the moving average, that's not high probability. At best, it's average. At best, it's 50-50. So if I'm a bull, I probably want it to pull back. So I've got a chance to kind of squeeze in a little bit more reward, reduce my risk. And so on the daily, what I'm looking at is, well, if there's a daily measured move, where's that going to be? So you basically ignore the time frame and take the same scalping principles you'd use from a 5-minute chart, and you're using it on the daily. So, for example, if we go back here, we don't know the next part of the chart, but we know we're in a bull trend. We can't even see the 200, so we know we're in a high time frame trend. If I'm a bear selling these, I really don't want to see this bar. And if I'm buying that bar, maybe my stop's down here, maybe my stop's down here, but I'm buying that bar to go up somewhere there. And so if I'm short, I don't want to sell and have a stop up there. I prefer to get out and join in for what's going to happen. So you can take an expectation on what's going to happen here. What are these bears going to do now? They're going to try and sell, pull back, and get out, or they're going to get trapped. And they got trapped. So now this is more likely to have a pullback and a second leg up. So you can use your same 5-minute price action on the daily, and that's going to give you an expectation of those targets. And if we look back on the daily chart here, we've got a strong bear trend. A couple of legs down, we get up to the moving average. What happens? Sideways. Pull back and then go. We get back to the moving average, 4 bars sideways. But we've got to be prepared. If that's kind of a common outcome of, 60, 70%, what's the 20, 30, 40% chance that we just rocket up? In which case, it'll be very obvious if we go to the 2nd of November what this day looks like, right? It's probably going to be a bull trend from the open. So that, I think, is a good way to kind of stay bias-free as possible. So let's get the 5 minutes. Now, feel free to post where you bought, where you sold, where you got out, how you managed it. Management's a really key part of trading. For me, I think the agility of managing trades is what's going to keep you profitable. It's also the end of the month, and so let's talk a little bit about stats. We're traders, we're running a trading business, and businesses need numbers. What are some key trading stats you should be checking? See if anyone's done their homework. If you were hiring a whole group of traders, what stats would you look at? Wins, losses, break even, that's really good. So hit rate, sure. What else do we want to look at? Average win and average loss, and what in particular? What else do we want to look at? Average win and average loss, and what in particular? Absolutely. Average win higher. Very important. What else do we want to see? We want to see profit factor. Total profits compared to total losses. Z-score, profit factor. The one I'm not seeing is, that's funny that this wasn't compared. How many times I reset that account, Rose? On an absolute value, is my biggest win bigger than my biggest loss? Is my biggest win $300, but my biggest loss is $2,500? That's a problem. That's going to undo everything. Is my average win $100, but my average loss $150? So you can use these stats and all the other ones that people have mentioned, Sharpe ratio, execution, following rules, processes, standard deviations, D-score. These are all good, but for me, they're a little bit secondary to these key stats, because with those stats, I can understand what trades you're taking. If you're a swing trader, how will these stats be different for a scalper? And the reason I'm mentioning this is because you can pick one of these. For me, one of the things that really helped change my kind of trading future was reducing these monstrous losses. I could average $200 or $300 a day, and then I'd lose $2.5 grand. So it's green, 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 big red, and then it's like you never get it. And my hit rate was incredible, but I was a losing trader. Hit rate, number of wins over total trades. So I think some traders, their hit rate is actually too high. And you might think that's ridiculous. No, I think, let's get rid of Grammarly. It's too high because you're scalping. You're taking great swing trades, you're taking great entries, and you're just scalping your way through it. You're going, yep, take the win, you know, take the pain away. I'm a good trader, pat on the back. I need to watch it go another 15, 16 points. But you took your 5. So in order to stop big losses, I think it has to become a focus. So, you know, you come into your trading session and that's your focus is, okay, you know, for me it was like, okay, my regular loss was $1,500. Well, that was my regular big losing day. So I'm like, okay, I can't go over 1,000. So I lose 1,000, that's the end of trading for the day. And then when I could get it from 1,000, get it to 500. But that's the only thing I could focus on. I'm not trying to learn new setups. I'm not trying to do too much. It's like that's my criteria for winning. And that takes a long time because you focus on something else and then you just keep scaling in. There are little programs you can get from NinjaTrader. TradingView has it, which shows open risk. So it shows your total position, you know, win-loss, but also the open risk on your stop loss. And so, you know, I bought one of those for $50. And that was an eye-opener because I was actually, you know, scaling into trades. And then at some points, my open risk was, you know, 2, 3, 4% of my account. So even though that's going to work most days, occasionally you have a big trend day. So you're scaling in a trading range, everything's great. Yeah. Uh-oh. Bang, big loss. So what was actually happening is I was scaling in. I was kind of just lucky the rest of the time. So you really need to have have your stats for what's the account size, what's my max risk. I recommend people use 1/4 to 0.5%, and then you're going to cut it in to 2 if you're going to have 2 trades. So you've got some ammo to scale in. Okay, so we're about to kick off for the market. We'll talk some more about it as we go. I think it's a really important area. So we're opening basically without a gap at the moment, and we're sideways on the 60-minute chart. I said we had a 60-minute bar that got 1-to-1, looked like those traders got out. What I'm waiting to see is a trader's going to buy again here. Is this going to be breakout, pullback for a second leg up? 15-minute charts. That's the RTH. So up here I've got the overnight, and I'll switch that back to RTH soon. Julius, great question on scaling out. So show me a setup, because I think most traders have their stop in the wrong place. So your first trade is too big. So you just give me a day and a bar number and we'll work through it, because that's a really good question. I want to answer it. From some traders have sent me their trades and their stop placement is not correct. And their exits are not really correct either. But when they put the stop in the right place and they take the right entry, those trades work out. So, all right, so very small gap up, 5 to 10 points. So we're expecting this to close. We're in the middle of a trading range here. You can see it's possible to be on a bear swing from up there. It's also possible to be on bull swings with the low down there. You could be, you can put your stop below that bar. You can be on a swing. And so this usually forms a triangle when you can be on 2 swings at the same time. So yesterday was a bull bar, and there's a really high chance. I'm just trying to think what my stat was on that. Just give me a second. Can I open that? So if you look at this, now let's just copy that. Oh, that's terrible. Let's try again. Let's try that. So this is the daily chart, and I'm just looking at inside and outside bars. So the chance of getting an inside bar, about 8%. Just looking at 120 bars here. Get about a 20% chance of an outside bar. So that means you've got a 70% chance of breaking a high or low. Okay, so traders are looking to see what's going to happen above and below bars on a 5-minute chart, and the same for the day. All right, so we're pretty close to that high. I'll put the overnights on there as well. So there's a very high probability of going above the Globex high or low in a session. Very rare for the days not to do either or to do both. So let's get Globex low. Globex low, thanks very much. Probably should have done that a little bit earlier, it's okay. So I'm going to assume most traders are going to take action on the close of a bar. They're going to look to buy above a bull bar, sell below a bear bar. I'm going to call out potential limit order trades, but I'm just going to assume that you're going to follow what the bars are doing. It's generally the easiest way to trade. So if you're a bull, you've got a couple of different possibilities for your stop. Okay, you can have it at the low of the day, but they're all kind of pointing towards that Globex high and the measured move target from yesterday. But you can see that that target is potentially too far away for a one-to-one. Now, if we're going to get a bull trend from the open, we want to see 2 consecutive bull bars. I want to see very little in the way of pullbacks as the bar's forming. I don't want to see it go up 3 points and then down 3 points, up 4 points, down 3 points, because that means someone's scalping on a lower time frame and making money. Do you think we're always in long, always in short, bull trend, bear trend? What does everyone think? Trend, bear trend. What does everyone think? So yesterday's high is 88.5, which is 2 ticks away from where we are. Nice, and you can see if you read through those comments, the variety of ways to look at it. And that's a sign that we might be in a trading range. Because if everyone just went always in long, always in long, always in long, bull trend, always in long, always in long, then it's pretty obvious we're in a pretty tight channel, we're breaking out of stuff. Your stop's going to be wide, your size is going to be small, but your probability is going to be high. You can make money on that trade if you can scale it. So for me, that's the last very strong swing point, and we pulled back basically 75%. So that's a sign to me that we've gone from a strong part of a channel to potentially broad channel, some kind of a trading range. But I'm open to the fact that because we're above the 200 and we're above the 20, that pullbacks into this range are going to be bought to go higher. But you can see bears can make money, sell higher, and bulls can buy lower. Always in trading range. I think as Tim, as Dutch Tim says, always in doubt. I like that. That's the always in trading range. And if you're confused as to what the context is for the trade you're taking, well, then you're certain it's a buy low, sell high environment. You're certain for scalping, taking profits. If you get one-to-one, it's usually better to exit, get flat, and then wait for the next trade. So this is kind of decision time in the next 4 to 6 bars. This is a bear bar on the daily chart. We have a really strong bull bar that closes above the high of it. The bears get a chance to sell and come back to this area, or will this just follow through and they're going to have to take a big loss? That's the question, I think. No one mentioned any bar numbers for the trades they took. Fair enough. I missed a question up here. Ilan, okay, what keeps messing up? Per the traders, a question, the tighter the stop, lower the probability. Can you tell me which, give me a day, give me a bar number, long, short? One of the reasons I think I sucked at trading for so many years is because everything I did was so general, and the more specific and precise I got, the easier it was to refine my entries and focus on what works for me as a trader. I knew a lot of general market rules, but just couldn't maintain an edge. So bears don't have a bear bar yet. You've had possibly 3 legs up, 1, 2, did we go below? We're high in the trading range. So you can see not a lot of traders 4 minutes in eager to buy above that bull bar. So the same way on the monthly chart, traders not eager to buy above. And on the 60-minute chart, you can see it's fractal. Traders kind of waiting. How do you get more specific? Thanks, Tom. That's the question I was hoping for someone to ask. So every trade has a context, and you have to get really good at context for your chart. And you have setups that exist in a particular environment, and you go and find 50 or 100 of those. So I like breakout, pullback, second leg trades, basically. And you specialize in that. You spend a lot of time with them. How do they look in strong bull environments, strong bear environments, trading ranges? How big is the pullback you expect? How many bars does the trades take? What does a good one versus a bad one look like? You get super specific on the setups you like to trade. So 2, when above 1, but it's basically a 1-tick body, so it's not a sign of super strong bull trend. Not a great bar to sell, but acting more like a trading range. So I think what I was doing is trying to trade every bar on every time frame, on every chart, every time of the day. And you can do that, but you need to be very, very good. You take one setup and become an absolute master at it, you'll find that carries on to a lot of other setups. So if this is a double top, we might have targets of 56.15, a little bit higher. If we use the kind of most conservative double there. So we've got an outside bar, the last hour, went below the low, found buyers. And we might be doing a similar pattern here. That's a double top, breakout, and that's sending us to that 56.15 area potentially. But and if that's the area, a trader's buying below there, trying to swing it up, we'll see. So I'm looking for the double top, the double bottom, break, and if 2's the test, then there's a couple of choices for that range, for that pullback test. One might be 56.06. I think this one's probably the clearest on the chart. So we've triggered the bull bar on the daily chart. That makes sense. If we look at the RTH chart, we've got breakout and follow through. And I said yesterday, usually when you have a day with 2 really good consecutive bars, you've got to expect pullback for a second leg. And we haven't gone below the low of any of these bars, so it's looking like we're getting more breakout and sideways. Though with that leg from the bears, I'm going to expect them to sell a little bit higher, potentially that measured move. Tom, at what point are you over trading? Look, it's a good question. I think you need to be able to judge that for yourself. You'll usually be able to see it in your stats. Tracking sleep is a good idea. So good 15-minute bar for the bulls. You can see on the 15-minute RTH chart, we've got a good close above this trading range here. So similar measured move targets. If we're taking that whole range, it's 56.30. I won't put too many of these on the chart. I'll just have a couple. I tend to turn it into Picasso. So triggering the 15-minute buy. We're at 5,600, so we're at a big round number, and we'll see what happens to traders here. 5,600, so we're at a big round number, and we'll see what happens to traders here. Traders who bought the close of 1, they've got 1R, looks like they've got about 10 points. Wow, so many messages. This is awesome. How do experienced traders scale in without having an occasional 4 times loss? Well, you don't. You don't have a 4x loss. Show me, like Julius asked you before, just show me the bar, entry, stop, and where you scale in. Because all your scale-ins put together are still not going to be bigger than your open risk. So if you buy bar 3, where's your stop? Here, I don't think it's a good idea in the middle of this range. I think it's down here. So your stop's far away. Right. Which is what we said in the pre-market. You've got a stop down here somewhere, and you're looking for a move up above the Globex high. Some traders would argue putting it below 1, but you're in the middle of a trading range. This is a triangle, so there's good odds that we're going to come back. There's an 80% chance that 1 is not the low of the day. So you don't buy 1 and put a stop below, sorry, you don't buy 3 and put a stop below 3, right? So let's see what happens to these bulls. They buy, they get 1-to-1 risk reward. Do they exit that trade or do they stay for more? They've got to break out of this range. They've got targets above. So we're 4 minutes into the bar, and the same thing that's happening on 1-2 is happening on 3-4. Where is the strong buy above? Traders want to see a breakout and follow through to continue holding. If they bought above 3, I'm trading a 15-minute chart. Now we've got some more targets up there. Let's put that there, so let's do it properly. It's 56.20. I think I can put it on that chart by itself. There we go, that's that up. So not great follow through for the bulls, but still strong breakout above that range. You can see we tagged in the bulls above that bar. We're probably going to come back and test that breakout. Bulls above that bar. We're probably going to come back and test that breakout. We've got trading range price action. Good bar, bad follow through. Good bar, bad follow through. We know only a 20% chance that this is going to be the low of the day. So what bear scalpers are doing is they're taking that trade. Now they're likely to scale in later to do that. It'll be interesting to see what happens if you sold bar 1. On a 15-minute chart, is this 1 leg, pause 2, final flag 3, come back in the range? Maybe. It's still quite strong at the moment. Someone just mentioned wedge. Well, they haven't got the reversal signal bar. Yeah, Ilan, when you're trading a breakout point, I think that the key bit that you don't see after the fact is how quickly, like how aggressively do we test that breakout point? So do we just plunge down, or do we kind of very slowly touch it and launch up with a big tail? And that's the advantage with the limit order, is that you can get filled and then you can kind of judge, okay, what happened. This is a micro channel for the past few bars. So will bulls have pulled their stop up to 3 to exit, or will they buy more below 3 looking to break even? I think because it's a trading range environment, I think scaling is a little bit more dangerous, and that's why I think we're coming down so fast. Traders wanted breakout, follow through, and then 25 points above, you beauty. Now they're waiting to see what happens at this breakout point. So I think more likely a scalp here anyway. I'm long for the scalp. So you can see on this overnight chart, we're not really doing this anymore. We haven't got that bull channel style, a little bit more sideways. And so it's usually better in that environment to trade a bit smaller. And you're expecting, if you buy up here, for example, someone asked a question about scaling. So my stop's down here, right? So I'm buying down here with the intention to go much higher. But I've got ammo, and what I can do is I can, let's switch that to a fib with 3. I've now got a choice of where I want to scale in. I don't necessarily have to buy below that bar. I can wait for it to come back lower. I can choose to buy down here. I can choose to buy much closer to my stop. And then I've got a chance to, if we get back to my entry, make 1-to-1 or 2-to-1 on that scaling. And that's a really strong way to trade, I think, if you're not comfortable taking the earlier entry, see which bar fails, and then you can trade back to them. So if you're long here and you've got a stop there, well, if you bought one with a stop here, that's a test, so you're fine. You want that to give you confidence we're going to pull back and keep going higher. So I just scalped back to the 4 low, so buying the breakout point, and then you've got another breakout point here, and I just scalped in between them. I've got half running. Let's see what happens. Bears want to break 3, pull back, and then kind of close this gap, I think. You know, so if you're a bear, you're going to try and sell. You take a low probability trade to close that gap. I think it's better to wait to see bears making money first. Did you just refer your question again? Thanks, mate. Question about inside bar, outside bars. When you see these form, is there a better than 50% chance? Is there a better than 50% chance of knowing it'll be continuation? Yeah, because context. Right. So if I look at this area, what do you think the probability is? If I look at this area, what do you think the probability is? And there's a couple of inside bars in here. I think there's 1, 2. So an inside bar here on 11 is different from an inside bar in this, because this is a tight bull channel. So this is more likely a pause, and if we go below it, there's probably more buyers, as opposed to that's going to be the sell of the day. You know what I mean? You don't want to sell that bar. You want to trigger and try and buy against it usually. But in a trading range, they're usually targets. So you see inside bars here. And then I'm looking to shoot back to them. Are there targets later here? It's a very tight trading range. So bulls trying to get back up to the 3 high. I'm not sure what that magnet is, but it looks like we've hit it. So if I'm in a bull trend and I buy above a bull bar, then those bulls should get a chance to get out. But bear's doing well to push it back down. Yeah, did that help, Ace? So it depends on the context. You know, here's another one where even if you can't see, if we come back to that inside bar, it's probably going to act as support or not far from it. And the same thing that happened there, traders buying below it there, same thing happened there. So yeah, go and look at 50 charts, just looking at that concept, and it'll kind of open your mind on to inside bars, I think. Bulls having a little bit of trouble with that continuation and looking more like that micro wedge, 1, pullback, 2, pullback, 3. No one wanting to buy high, traders happy to buy low, scalping back at the close of 3, which was the close of that 15-minute bar. So I took profits on that second half. 6 is just not doing what I wanted. Thought 5 was okay. And if you can imagine the difference between those two bars, so say you're trying to buy a breakout point and you get a bar like 67 versus you get 5. So if the bar closes like that, well, your limit order long here is looking a little bit less happy. Thanks, Proverbs. Yeah, we've got news in 20 seconds or so, so we can often kind of jump around a little bit. It's another reason for me getting out of that trade. Generally like to be flat. Going into news. Oh, there we go, another inside bar. So once again, traders bought a little bit below. I don't know if they managed to scalp much there, but I think stopped too far away for that buy anyway. So bear's trying to break this, break 3. You know, if 1, pause, where's your high low? Maybe behind these bars, below these bars, looking to break out and close that gap. Bars, looking to break out and close that gap. I thought this breakout was reasonable. I think the bulls will try again, maybe a little bit lower. So we'll try again, maybe a little bit lower. So will bulls buy below 3 to protect that entry, or will they just get out and say, I think I bought too high? That's what we're going to see. Protect that entry, or will they just get out and say, I think I bought too high? That's what we're going to see. The trader buys 3 and buys more below 3. Can they get back out to their break even? Or other bulls in a channel just trying to buy below a good bull bar and scalping that way. So we ran up to the high of yesterday and we found sellers. So that's an interesting bit of news. A high ammonia, it's 3 pushes up from the overnight low. Yeah, so this is a good bull bar closing above this whole range. So the good thing about that bar for a 15-minute trader is it puts anyone who's doing the opposite in here on notice that they might be holding a bad short. All right? When that closes and then triggers above it, it says, hey, people are buying above you. You know what I mean? So a lot of traders in here, I think, were quickly trying to sell, maybe get back to the low of 80. Okay, so that's confirming that that might be part of a measured move here, 56.10, which is part of this range. And so it seems like those 15-minute traders are going to buy to at least get back to go above that 15-minute bar again. But I know what you mean. It does look like a wedge. It is 3 pitches up. It's even a nested wedge here. But at the moment, I'm kind of just going to let the bulls keep doing their thing, and I'll see if I can buy again. There's nothing wrong with getting out of a trade and getting back in. I mean, you've got to do that most of the day anyway. But usually, if you're long and you get out, you want your next entry to be higher eventually, right? If you're getting long and then you're getting back in here and getting back in here, you're in a bear channel. You know, you're doing the wrong thing. Sorry, Ed, you asked a question about that somewhere. Ed, can you just resend that question to me? Sorry, I missed it. There's many questions, which is great. So most days, I forget the exact number from Al, 80 to 90% chance of a 20-point swing, and the volatility is really high at the moment, so that could potentially be a 30-point or more, like yesterday. So, and from down here, yeah, so big swings. So bears getting that bear bar to make it look like a wedge top and getting below it, but they need to kind of force these bulls out. Make it look like a wedge top and getting below it, but they need to kind of force these bulls out. Opening within the range of yesterday and then closing back in this range, that's good for bears. They want to keep this as a trading range. They want to stop bulls from holding their positions. But if you're a bull and you bought 3 and now we've closed below that bar, how are you feeling about being long at this range? Oh, you're on DAX. Sorry, that's right. You're on DAX. Okay, so what was your bar numbers? 58. Thanks for giving us specifics to talk about. Okay, so here we're in a bear spike. So that's great. And then you're sideways. Okay, so you're short 58. Is that right? I think we just broke through back into that range. Yeah. So not a great looking double top breakout. Now we're back into that range. So the double top not so clear anymore. And you can see these traders not happy with 7. A lot of them got out of that trade. So back down to the low of 1. So that was the high probability trade to test the 1 low. So you can see, okay, you try and have an attempt at a trend for an open, it doesn't work. You don't get to follow through 6 and buy above. It's time to get out. And so I said, scaling in below 3, not a great idea, particularly when you've got a trading range. So they're selling 7 and below, and they're looking for a test back down to 72 low. Those traders who bought on the 15-minute chart, they've got to stop down here, so they're going to be happy to scale in. But if you're trading a higher time frame, you need a much smaller size, right? Yeah, so these are all fine shorts. I mean, my first question is, given this is the context of the day, possible, I think, to sell a little bit earlier, but it's fine to wait for the low 1, low 2, particularly the moving average. Question is, where was your target? How'd you get stopped out? So it's okay to wait for probability, but you've got the risk reward. You can see a lot of traders did that. That's why we hugged that area. So they were good trades, mate. So traders buying the 15-minute chart, so they tried to do that on 3. They're trying to buy that low to get back to that break even. So this is telling us that it's not a strong bull trend. This trading range is going to keep going. And this trading range is going to keep going. So bears on 7 got their 1-to-1. At least if they're putting a stop above that bar. So back into the middle of the range. So we went above 1 to get a new high. Now we've created a new low. So we've got this expanding triangle shape to it. Bears have got 2 legs down. It's strong. Some of those traders buying below 1 are trying to make a decision as to do they just exit that position or do they keep scaling. Usually in the middle of a trading range, you need a very wide stop on a small size if you're going to do that. And you shouldn't do that if you're just going to exit, 1 bar later. You know what I mean? If that's an opening range, even though it's probably not as many bars, we want to get back to 77 low, get down to Globex low. So this might be one of those days where we take out the Globex high and low. Yeah, Romain, it's if you go back and look at enough days, I really encourage you to do that. Get yourself a coffee and just scroll back and then just count how many days bar 1 is the high or low. And sometimes you get you get a week where it happens 2 or 3 times, but then it won't happen for a long time. So there's a lot of algos that get built to fade bar 1. But in my own testing of it, if you're going to fade bar 1, you need to be taking 3 or 4 to 1 on that trade, because occasionally when you get a trend from the open, you get punished on that day. So you need to be able to absorb that huge loss. So failed breakout above yesterday's high. We've got that wedge on the 15-minute chart, even though it was a weak signal bar. You've got some traders selling below it. Are they going to hold for a swing down? Or some bears short below 8. Going to hold for a swing down. Or some bears short below 8. This is a strong breakout and follow through, so you're expecting the bears to have a second leg down. I was long up here on my scalp. I didn't sell yet. So if I'm a swing bull on the 60-minute chart, we make a new high, my stop's down here, and that's what the bears are going to hunt for. They're going to go hunting. No, I didn't, Granville. I was long on the scalp. I bought the breakout point, took half off below 4, and then took the other half off on 6. If you zoom into 6, it's a little bit easier if you zoom into like a higher time frame chart. 6 started really strongly and went bang all the way back, and you can watch it without doing this. And so it came up in the middle. I got back out. If it comes back down, you just get out at break even. But you can see that without having a lower time frame chart. What I'm watching for is, can someone do the opposite to me and make money? For the scalp long, I'm 1 times the signal bar. So it's not a swing stop. It basically allows me to scalp and scale in at the low. And if that doesn't work, then I exit and look to reverse short. But I'm comfortable managing that because of this environment. It's not really a swing environment. Yeah. And so that's going to prevent you. Here was a good one yesterday as well. So you have a stop that says if bears can if you can sell below a bull bar and make 1-to-1, then we are not in a bull trend, right? So my stop is at a place where I've just learned something new about the market. That helps. And I generally put my stop somewhere where I'm like, okay, now I've learned something new. So 15-minute bear bar, good signal for bears. Looks like they're going to push down or closing that gap. They've got, I think bulls have got their stop down here, Globex low. Oh, these bars are so big. It's 20 points under 7. Crazy. So volatility is big, and that means you need to trade much smaller than you think. That bar is 13 points tall, when you're usually trading a bar that's 5 points tall. So it can be really easy to walk into a session, look at the chart, enter a position, and then you look at your stop. That's why it's good to have one of those indicators that tells you your open risk, or some platforms will show it to you. They say, oh, actually, that position's too large. I've got to reduce it. Oh, nice, Bernadette. Well done. It's if you can put that into your trading technique to be able to get out, the market's doing the opposite, reverse, you can usually make back your losses as long as you've still got time in the trading day. I sold as 8 was going down. Once I saw that those traders on 3 were not going to be happy. So you wait for it to go up, and if it's not going to get back up here, then you can scalp. And if you don't want to take that scalp, you can wait for 9. Now, if you're a bull with a stop down there, you're in that zone where you buy up there, and traders say, hey, I'm going to scale in down here, hoping to get back up into that range to protect that position. I don't recommend that for newer traders. It's usually just easier to trade the current breakout and look for a second leg. But certainly one to watch and see what happens to those traders. It's less relevant now because you had, potential higher low that got broken, 3, 2, and then the test on 9, putting a target probably at 61. Oh, fantastic. Ken's just sent me a message saying Al might pop in, which is wonderful. Get a doctor in the house. If I get booted off the stream, well, it was for a good cause. So first target, I think that measured move, pull back from 9. You've also got that whole range, which is down to 52, got the Globex low. So we called the higher time contracts pretty well. We said broad bull channel, bears able to make money, bulls able to make money. Bulls tried to break out, get the follow through, didn't on 5. Second attempt 6, failed on 7. Bulls get out, all in short, pull back, and then bears selling. Now, if it's a trading range, as we get lower into wherever you see the bottom third, and you've got a couple of possibilities for it, traders will start to scale out. And you said stop below 3 was a bad idea. I did, if you're buying above, but surely that led to a much less loss. Yeah, and that's the point. So you start with your stop wide, and then you have price action that comes after that. And so then you have a pullback. So you don't want your stop here for that pullback because you need a pullback for that trend to work. But then you see 6, and then you say, okay, well now I'm closing below that bar. I'm going to exit below that bar. So I'm moving my stop up there. The alternative is to take that trade with a stop there, but I think if you do that 100 times, the volatility is going to take you out. So it's a bit more of an active kind of management. The alternative is you put your stop down here, you get a breakout and follow through the other direction, and you get out. So it's not like a set and forget trade. Now, if you're a Walmart trader and you just bought that bar, well then, you're at Walmart, so you don't even see any of this. So you can see on the ETH chart as well, weak follow through above that bull bar. No one wanted to buy up here for in a trading range. The next buy is going to be far lower. If we look at the RTH chart, we haven't had, we've still got 10 minutes or so. Bull inside bar with a tail. Not many buyers up there. So very strong selling now. So you definitely don't want to be long or scaling into a long. You had breakout and follow through on the 5-minute. You had consecutive bear bars on the 15-minute. And we just hit the Globex low. So we're in a low probability day. And that means strange things can happen. Yesterday was also low probability. We had a 100 point gap, and then we went another day's range above it. So 15-minute bears got a little target below. Strong sell signal, so you'd expect some kind of reducing your position at 1-to-1. Generally that's the case. The better the signal, the closer traders take 1-to-1. But in this context, also nothing to buy, so we'll see what happens. Because I took my trade on the 15-minute chart, I'm now going to manage it on the 15-minute chart. Oh, well done, Bud. Nice. So you have a small gap up, you've got bull bars, you've got the context to go long. The buy signal doesn't trigger above, we close below. You need to get out of that long position, and then you've got a signal to go short. So you can see some profit taking at the Globex low. This was an area for, I think, a swing bull if they're pulling stops up. Some might have had it a little bit lower, but I mean, you've got, you're working your way higher, so you're not going to keep so much open risk, I think. Other traders might see this as a bull spike and look to buy here for a scalp up. I wouldn't usually do that when I've got 5 counter trend bars. If you take that trade, 50 to 100 times, this can just collapse down, and you're going to take a way bigger loss on those trades. So we might get an outside day here. We went above the high and reversed. We're right in the middle. Not unreasonable to go and test the 200. Probably need to pull back first. We've got a micro channel. So if a trader sells up here, where's the lower high for your stop? So if you're selling 6, there's your 2-to-1. If you sold below 6, 6 took off without a pullback, so I just used a signal bar, so that's your 2-to-1. So we're at a place where there are a lot of bears getting out. 15-minute bears still need 49.75. Trying to think which trader was talking about inside bars, so it applies on all time frames. And the same thing happened. We broke out, we came back. Hi, Aaron. So when you're looking at a spike, the difficult thing on the time frame you're looking at is where does the channel start? And if you're in a micro channel, it's often easy just to shoot down and see where the overlap is. So if this is a spike on a higher time frame, you can see 9 did something different. That's the start of the overlap. So we've got a channel that starts here. Now, a lot of traders are going to use the high of that bar. I think it's really useful to just kind of put a box or a couple of lines and say, even if bulls get back to this area, that doesn't mean go long. It's probably a higher time frame breakout and pullback for a second leg. But that's where the channel is. So if you're looking to sell, then yeah, you need a pullback and a sell signal, but you're bearing in mind that if I'm taking a trade and my stop is far away, where are the targets we're likely to test as well? So if I want to, if I want to sell the market, I can only do it if I'm happy with a wide stop and I can sit through, a 6-bar pullback. And we've had a couple of those yesterday. So you sell this big bar, you can't be getting out above 23, right? If you're selling down here, you're selling here with that stop, and you're waiting for the leg that pays you. Now you've had 3 or 4 legs down. This leg's different. If you've waited for 2 legs on this leg to sell, then you need to wait for 2 legs on this one, right? Because pullbacks get stronger. So if you know what I mean, if you're patient, you're aggressive earlier in a trend, you're patient in here, you don't suddenly get more aggressive. If anything, you should be more patient, and that's what prevented you taking a bad sell there. Couldn't you put your stop above? Yeah, absolutely. The leg that pays you. Yeah. You can, but you're putting it in the middle of a trading range as well. So if you're taking high probability, you need more risk. So if there was a bull that bought below here, so if you had your stop anywhere here, you got stopped out. Potentially, if a bull's got a stop here below 73, that's the next target. And that's trading range behavior. We just work down and we just run all the places that can be a stop. And if you're looking at a chart and you're saying, it's not really clear where I put my stop, like here, clear. Here, a bit unclear. And that's why skunk stops in trading ranges are bad places. They're much better places to aim for. So if you've got lots of open profit, there's only 2 ways to reduce that risk. One is to move your stop. The other is to reduce your size. So we've now got an RTH bear bar. It's very large, and it's making you sell right in all this tight trading range. But anyone that's long here on the 60-minute chart is looking at that bar and thinking, yeah, that's not quite what I expected to see. So if I bought this bar here and I see a bear bar close underneath my entry, well then how am I feeling? I think this already gave bulls that feeling. So this is another reason that those 60-minute bulls are probably not happy about holding long there. So bears selling in this trading range, trying to sell higher and looking like what we said earlier, that we only tested the top of this range once. We probably need to come back and test it one more time. There's a bear channel we broke out, but this is not enough of a test. Sold below 10, took half off at Globex low, stopped us above 4. Nice, huge risk for me. What can I do? Yeah, so you can pull your stop down to above 9, maybe the top of the channel. You can also just keep your smaller size that you have available as a runner. The other alternative is in a strong spike, say I'm not going to sit through a pullback. I think this is a bit of a gift to anyone that's short. I'll have a stop 1 scalp size above any bar, and if bulls can pull back strongly, then I'm out. But I really appreciate you putting the question, because we rarely get a question on how to manage risk. But managing risk is like the key skill we're doing here. We're also underneath the bull spike. We're underneath the 60-minute bull bar. So there are bulls that buy here, they're going to buy lower, betting they're going to get back to the low of that bar. One, 2, 3, 4, 5, 6, 7 bars down, so already a bit of a gift. Similar to here, the expectation is sideways, bulls have a couple of chances to do something and create buyers above bull bars. And if they don't get it, as soon as these bear bars, you get one, some traders sold, more traders sold, boom, falls down, creates another layer of resistance. And the bulls haven't yet had one of these pullbacks. So see how the pullbacks get stronger from that to that to that, and then reverse. So weak buy above 13. There's not a lot of traders that want to go long there. The difficulty is, where do you put your stop? Is your stop down here? You know, a swing trader sees that and goes, okay, well, I'll take a chance buying there, stop there, that we're nearing the low of the day. I'm not recommending that when the channel's so tight. I did similar race. I took part off at the Globex low because that's already low probability, and then I've got half running, so that happens. Usually in a trading range, I wouldn't do that, but on the daily chart, you know, if I look at the daily chart and I think, you know what, I don't really want to be a buyer above that bull bar. I even have an indicator which goes orange and red if I'm in a bull trend and we come up to it. You know what I mean? That's specifically there to stop me doing that, because that was a big problem in my trading. I was just so keen to get long. So even though I don't make that mistake anymore, I still like the indicator. It brings me color, whatever. So bears would like this to be some kind of wedge bear flag, a couple of pushes up, and they want to swing down, you know, 56 down to 55. They need some lower highs here. Bull bar is profit taken on bar 13. Yeah, I think so. I think on 11 you can see, you know, I mean, we're kind of guessing, right? We're just trying to use logic to work out what's happening. You're buying below an inside bar in a bull trend, and you're expecting a test back up into the range, but you're not holding that trade for a long time. You're looking for a scalp. We're 20 points below a lot of these bars, 40 points below 7. We're 20 points on the 15-minute sell. Even on a 2-minute chart, how many bull bars do traders buy above? None, none, none. Difficult to see where the swing point's going to be. Here we've got an inside bar, so I had that measured on the chart. I thought that was a reasonable place on the 60-minute chart. You know, you can't use this bull bar because we went below. That's the last bull inside bar that had a strong breakout. Some traders might use this bull bar here because we've got a new high. That's reasonable as well, but somewhere between those two swing points for a measured move down, doesn't have to be today, it can be another day. Hey, Sakembo, favorite scalp setups? Oh, I've got a few. Classic one is just bad buy, bad sell. It kind of is weaved all through my trading. So that's why I was saying here, this is a bad buy. Okay, you're never going to see the chapter in our book that says wait for a bear bar closing near its low and buy the close, right? But we break strongly above it. So that creates two trades. One is a sell back to it, and one is a buy at it as a test. You're just betting the trader's going to do what they're going to do. I'm in a bear channel. I'm selling. Oh no, I get stuck, and so I'm entering where they are. But you don't have to do it on the daily. You can use it on any chart. I like micro channels. You know, anything with an open gap, so it has that possibility for a measured move from the pullback. But most of my scalps have momentum behind them. So if that's the momentum, then the scalp is up, which is what I did yesterday. So when the market does this, the momentum's still up, and so I won't take the short. I'll be looking to do the opposite, which is buy. Right? And if you can just stick to that simple principle, you'll have a reasonable hit rate. And then that sets up another trade. So you've got a strong momentum down, traders sold, and then they kind of panicked because of the pullback. So now you've got new momentum for a scalp up. That's even better because you've got bears panicking out. It also has heaps of trades. So if you don't trade all day, you've got time for trades to set up. Oh, D Chow, record-breaking day. Well done, mate. Good to close the trades down, close the terminal down, and big tick on the calendar. Green days make green weeks. Green weeks make green months. We've got the Flying Dutchman, Mr. Tim Stouts, joining us in about 20 minutes. We might even have a cameo from Al. So if I get booted off the Al Brooks satellite, you know where I went. Great trade. Yeah. That was a real turning point for me. I just thought to be a good trader, I had to be able to trade every bar on every chart at all times of the day. I just had these dumb beliefs. Like, they're so dumb when I say them, but I was so convinced that's what good looked like. But if you just start saying, okay, well, today's a green day, I'm just going to shut everything down and go to the gym, come back tomorrow. And you get used to turning up, trading, and leaving. Or you get turning up and say, okay, well, my max loss is $500, let's say. Okay, well, I've done it, I'm out. And then you build this integrity to yourself and to what you say and how you act. And that really comes through in your trading. So. And then once that becomes more consistent, then it's like, well, now you want to try and push yourself a little bit more, keep yourself improving. Yeah, first day of the month, at least that green one's there, you know what I mean? So expectation for the rest of the day, well, we went above this trading range yesterday, and now we're below it and getting back down to yesterday's low. So we've had two low probability events. One was hitting both Globex high and low, and we've hit the high and low of yesterday. So what were the stats? 20% chance. I would also add to that, if you've had a huge day tomorrow, trade half size. Huge day today, trade a half size tomorrow. All my biggest loss days came the day after my biggest wins. So you've been warned. Paul Tudor Jones sends his traders home. They perform really well. They go home a few days to a week. Let the euphoria wash out. First setup you recommend? Breakouts. Absolutely. Breakout, second leg. In terms of quantity of trades, okay, this is a breakout and follow through. So you're buying for a second piece. Might be 13, might be here. You get more experience. Counter trend traders will do this. This is a breakout. You're looking to sell for a second leg. They got a second leg. Breakout and follow through, second leg. This one got a second leg, but it was very difficult to trade because you have to take the pullback. That's why it's better not to do the ones that are counter trend. Here's a breakout and follow through. Stop there, wait for a second leg. 1, 2, 3, 4, 5, 6. 6 trades. Here's a bull breakout above the high, similar today. Pull back. That trade didn't work, so you take a loss. Now you've got a new breakout down, trade for a second leg, boom. Or if this is your breakout, second leg. If this is your breakout, this is your second leg. 3 or 4 legs down, you can stop doing it. If this is your breakout, there's your second leg. A lot of Ali Moin Afshari's trading material just focuses on this one concept. So I've still got half a position running, and I like to hunt for stops. And I think the last stop is down here below 4. I know it's an unlikely stop, but you know, I'll be quick to go out. Like my stop's been sliding down. It's overextended, but I mean, you know, it can still go 100 points. I think it needs a pullback because it's not clear how bears can reduce their risk here, even though there's more targets. Ray with the questions. Yeah, mate. So this is a bull breakout, so they need a second leg. So I don't count this bit. I think Al might potentially. I don't know if Ali does, but for me, this is all part of the bulls. So this is 1, pause, and then 2, pause, and then this is leg 3. But if I'm not sure, I just assume it's late, and then I wait for pullback. So I'm waiting for the first buy signal to trap all the beginners. It's dangerous to zoom in because the stop's still miles away. So, yeah. You can also look at the channel. How do you count it? Let's put you on the spot, mate. So, will we run the stops below 4? Oh, nearly. Is he going to get filled? Do it. One more tick, come on. Nice, there we go. That was very unlikely. So now we've got an outside day. Good for bears. Get rid of all these targets. Yep, so outside day, well done. So this is a bull bar on the daily. So, the daily chart has a lot more volume. So we got to the top of that bad sell. So Stikembo asked about that one. So that's an absolute crack of a trade. You can do it on a 5-minute, 15-minute, every time of day. So that's the magnet I thought we needed to reach, at least back into this kind of thin area here. I need to see a pullback. Not easy to hold, mate, but, my holding my swings has been really good on DAX and really bad on ES. Just for some reason I like to scalp ES, but I like to swing on DAX. And DAX has been just launching lately. So, but yeah, it just seemed like I was taking small profits on a lot of my ESs. So I was like, no, I'm holding. Fill or kill, as they say. So we're hitting the 200. We're hitting a daily magnet. We're hitting a place where I thought bears might, be scaling into sells. Sell higher. But this might need a couple legs sideways. We've got an outside day. We've got a triangle and this wedge. Well done for whoever called the wedge on the 15-minute. They did it before me. So usually with a wedge, you have a couple legs sideways to down. 16, yeah, absolutely, I agree with you. Everyone's getting really good, mate. Rose has been skilling everyone up hard, and Tim and Brad. So you've got, shaved bars on the way down, and then a really strong bar with no overlap. So probably some profit taking around here. This is a really steep move, and we haven't broken a trend line, so I wouldn't be surprised if we start to go sideways to up. Bear micro channels usually don't get above 5 bars, and now we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I bet you that gets in Al's encyclopedia tomorrow. That's my bet. Oh, your channel was right, Huya. Well done. I think you had that one up earlier. So bears have got probability, which means they've got big risk. Where do you put your stop? Well, on this time frame, a bit tricky on the old stop placement. So you've got a micro channel on the 15-minute, and on the weekly chart, bull's not able to get above that bar, forming an inside bar here. I think Tim Stout was saying earlier he expected sideways in a second leg, and at the moment he looks to be on the money. I thought the bulls would make him work for it a little bit more, up above 5,600, but you can see 5,601, no one wants to buy up there. That's 1 point. We really have 666 attendees. That is pretty funny. Well, then we know he works for the Bears. So it looks like the bears had their 2R target. I think I put it on the chart, maybe not. So 1R, 2R on the first 15-minute bar there. That's also what kept me in. Such a strong close at that target, and I was expecting that to be like a 10-point bull bar and be like, yep, probably should have closed. So all these bears will be trying to get paid at least for their bar, so that's a little bit lower. If that's a spike, will that turn into a spike and channel down to 5,500 perhaps? But I'll be coming to a close in the next 5 minutes or so, and Monsieur Stout will be joining us. Followed, I think, by Al and then Brad. So lots of trading happening today. Get out the encyclopedia. Make sure I hit my KPI for the day. So here we had more of a spike channel. Break below bar 1, measure move down. We want something a little bit more aggressive. Here's something a little bit more aggressive. Went below yesterday's low, pulled back, and then formed a trading range. Want more aggressive than that? Ooh, maybe Al will have one. Here we go. That's a bit better. So that's a strong breakout, but you can see that's a small day in comparison. So measured move down, strong collapse. Small pullback bear trend. So you can see breakout, pullback to a breakout point, and then reversal down. So someone was asking about pullback trades and breakout pullback trades. That's usually a good sign. You can either have a limit order at that area, or you wait for the sell signal to appear. And then if it's a bull breakout bar, well, then you've got your answer. That's probably not the right place. So we got to yesterday's low. A couple of key points on the chart today. So we talked a lot about 3, 4, 5, 6. So we had breakout and then pullback trade. It should have resulted in a second leg up. It didn't. And then you get a surprise bar 7 with follow through. So we said at the time, well, if you're taking a loss on your buy on 3, bad environment for scaling in. Usually if you reverse with that breakout and wait for that second leg, didn't matter whether you sold below 1 or you sold below 9 with a 15-minute chart, you had a chance, even if you had lost 26 points, which would have been pretty fierce on that loss, and you were late to exit, today you're okay at making that back. We had 7, 8, and then 9. Then we had a 15-minute bear closing on its low. So now you've got 15-minute bears looking at a wedge top, second entry short, and then we've been spiking down, taking out full stops all the way. The market might need a little bit of a breather. Here, traders are wondering whether this is going to be a measured move of that whole range. Bears will be pretty happy about that. Or we're going to form a bear channel. Well, we've got the Dutchman in the building, so what I might do is I might sign off and pass the baton across to the rest of the team. So really appreciate everyone's attention on the stream. I hope you got some trades in there, and have a great trading day. As usual, send all the hard questions to Rose, please. Just make sure you copy her in. That'd be great. And I'll see you all soon. Thanks very much.
Hi everyone, my name's Tim Stout. Same first name, different last name. Today is August 1st of the month. Yesterday was the close of July, and yesterday was FOMC day. And the reaction to FOMC was actually quite moderate compared to the general price action that we've seen for the last few days. I think yesterday was quite interesting because FOMC coincided with the end of the month. And I think when the end of the month is there, or end of the week, or even an end of day, there is general volume present to determine the close of the monthly bar. And the close of the monthly bar was slightly bullish, right? The month opened on the Globex chart. The open price here was 55.3425, and we were trading around FOMC 55.60. And so I think that in general, the end of the month bulls and bears were more prominent in determining the price action of yesterday than the actual FOMC bulls or bears. In general, a lot of times the real reaction to the news of FOMC comes the day after. And so I was very much prepared to take a short today because, as you can remember from my attendance last week, I said that this week actually has a chance to get a bear bar, and yesterday it was a bull bar on its high. Even this morning it was a bull bar on its high, although I'm still believing that this week might be a bear bar. On the weekly chart, we are still forming an inside bar. This low is higher than that low, 33 over 32.5. This high is still below that high, so the week is still an inside bar. When I was here last week, I said last time we had 2 consecutive bear bars on the weekly chart, we had a big third one. When we had 2 consecutive bear bars on the weekly chart, we had a big third one. Even here, we had a third one. Here, we had a third one. So almost always, except maybe here, but we went below that week, we had 3 down bars in a row. This week so far, with only 2 days or 1.5 left, is still a bull inside bar. So I'm still thinking that there is a chance that we will actually get all the way to the low of last week, which is 55.30. What would be necessary for that? A big bear bar today. The open today was bullish, and the follow through on bar 2 was minimal, but the only thing that the bulls needed. If you put a stop below bar 1 and your entry is a tick above bar 1, and I'm not doing it correctly, 76 to 88.25, 1 to 1 is exactly there at 5,600.5. 5,600.75 was the highest tick. So every bull here took 1 to 1 based on bar 1. It was also a wedge top, call it what you want, but everybody took profits there. I sold below 4, still believing that today has a chance of being a big bear bar. The last time that FOMC was on the last day of the month was accidentally, and this is where I got the information from, was actually on January 31st. So this is FOMC news report on January 31st, where the day was the same. It was the end of a month. So it was FOMC, reaction to the upside, reaction to the downside, and then this is what followed the next day, a huge bull trend, all-day bull trend day. And I believe that we are currently in the same pattern, but upside down, that this is going to be an all-day bear trend day that can go way further than you might expect. And so sold below 3, and I'm still holding from the sell below 3. I've not been adding on because I have been preparing for the webinar today. Targets at the moment, well, if you see yesterday as a relatively big trading range day, we went up, we went down, we went big up, we went big down, now we went big up, then probably the high of this morning and the low of yesterday is at least a trading range. And so if this is a breakout of that trading range, we're expecting a measured move down all the way to Tuesday's close. So that is probably somewhere in the 55, 56 area, all close to Tuesday's close. I have lines here at just above the 54.90 and the 54.60. but I believe we can even go further and even go sub 54. So I think today is going to be a all-day bear trend day, and it's going to close on its lowest tick or just thereabout. Coincidentally enough, I am a European trader, so I trade the DAX market in the morning. I had the same belief in the DAX this morning, and that's sort of right from the open as well. Even there, I think bar 1 was the high of the day, so that just was a bear trend from the open. Is this a bear trend from the open? Yeah, I think so. Even though that we had a small failed breakout above yesterday's high, it's still a bear trend from the open pretty much. This is so strong, right, that you can argue it's 3 legs on the 5-minute chart, 7, 8, 9, 10, 11, 12, and 14, 15, 16. But this is so strong on a higher time frame that this is a bear breakout that will most likely get follow through to the downside. So 3 legs on the 5-minute chart here mean nothing to me. If I see this on the 15-minute chart, if I see this on the 60-minute chart, all I want to do is sell, right? Sell the lowest tick, sell below anything, sell below bull bars, sell below bear bars. This is a sell for anything type of thing, where the chances of stops being hit here or here are extremely small. So the probability is definitely to the downside today. So some of these patterns, like what happens after FOMC, what happens on a new day of the month, will help you to see strong patterns and have, I think, a bias right before the open. Now, I'm already prepared to throw away my bias as soon as I see a bar or 3 that don't conform to it. So if I see consecutive bull bars at the open today, I throw all of that bearishness out the window. But in general, when I see things like this, bar 3, I'll sell it, right? Because of that chance of getting a huge bear swing. It's sell below 7. When we go below 1 and when we go below 2, you can sell below 8, you can sell below 9, sell for any reason in here. This is just going to continue down, especially if you see something so strong. But Tim, we've been going down 40 points or 80 points. It has to stop someday. Yes, but all of these bull bars will have a probability of failing, and rather than you're betting on the one bull bar that's going to be the reversal, there's far more profit on betting that this is going further down, right? See this as a giant big oil tanker that you're trying to stop with one contract. It's not going to happen, right? This is going to go down, and even if it bounces, now 20 points, it still has a probability of coming further down. Don't fight trends, and this is one of the strongest bear trends that you can get. Everything is just pointing further down. So do nothing or sell is at this moment what you want to do, and probably for the rest of the day. Look at how strong this is on the 50-minute chart, and again how strong this is on the 60-minute chart. Big bear bar getting follow through. Also RTH, big bear bar getting huge follow through. This is going to go all the way into 54.40 area and probably even lower. So that is where we are now. Let's look at where we are in regards to the daily chart. Well, yesterday was a great second leg up for the bulls. They closed the gap. There's break even with the bulls here on July 22nd, but we're still below this lower high. This is one big leg. This is the second big leg. Bears are estimating and assuming that we're going to get at least something of a third leg down, probably towards these gaps, probably towards these lows, and this could become a giant big bull trap. You can already see that nobody really bought above yesterday's high on the daily chart. We're selling off all the way here. Can we sell all the way into last week's low or this week's low? Yeah, we might be, right? We're already halfway, so we just need an hour or two more of the same type of selling, which will probably not happen, but we'll find ourselves at the low of last week pretty soon if this is the selling energy. So on the daily chart, nothing to buy here. Bulls that bought here had to scale in below the bar to get out break even. They're certainly not going to buy here, hoping with a stop here that we're just going to go up to an all-time high, right? So 60-minute chart on the Globex chart, right? Big bear bar. Well, where are we breaking out of? Are we breaking out of that low? Are we breaking out of this low? Are we breaking out of that low? The breakout point will determine the measured move, right? So the high of the range is there. Everybody can see that it's there, 5,675. And we're waiting to see where the breakout is from. If this breakout is continuing, it might be a breakout from this low. If it's continuing, it might be a breakout from this low. At the moment, I would say that it's probably a breakout from this low or from that low. So 54.77 could be a measured move, or 54.47 could be a measured move. Difficulty with breakouts on the 60-minute chart are that you've probably not always have enough time to get to those targets on the same day. So it might be that we get a big bounce and that we hit those targets tomorrow or even Monday. But we're waiting. Right now, this is a strong bear breakout. It's got some follow through. Still have 50 minutes on that chart left. We're waiting to see where the breakout is from. It's clear that it's a breakout. We just don't know what the neckline is. The minimum neckline is, of course, this, right? So that high to that low, 55.20. And if that becomes the target, then we might just find ourselves bouncing around 55.20 for a little while longer. All right. So what about selling here? Can you sell? Well, the correct sell is below 18, right? Start of a new leg, so the correct sell is to sell below 18. Likewise here, the correct sell in Brooks' methodology would be below 14. Correct sell is below 7 or below 9. And then if you sell below 14, your stop is probably at the high of 9. And so you're looking to see 1-to-1, which is around here. Can you tighten your stop after you see continuation of the breakout below 14? You might, right? So you might just want to crop your stop and then take 2-to-1 a little bit below here. But I would not have my stop above 18. I would have my stop above 14 or above 13, and not above 18, right? In general, a bear trend is, of course, a set of higher highs and higher lows. And the first time that the market comes up and takes out that last lower high, the market is not necessarily in a bull trend. The market is probably just in a trading range. And so if it's in a trading range, then chances are that this is the high side of the trading range and that we're going to come back down to test the low side of that trading range. And so if that's the case, then your stop above 18 is probably a skunk stop. And if it would be hit, then it would be probably at the high of the trading range. So traders are selling there rather than that traders are buying there, which is what a bear stop would do. So right now, probably better to have your stop above 14 or above 13. Even if we hit the 18 low and you've sold below 18, you can still get out below 18. What about bulls? Well, bulls really have nothing here, right? They argued that we had 3 legs down. We're now in a 4th leg down. And so some bulls will buy for a bounce to yesterday's low. But in general, I don't think there's a lot of bulls that have any interest in buying anything right here with a sell-off of more than 80, almost 90 points. They need to see at least a bar go above a prior bar, above a prior bull bar, and see that the bulls are making money before they're willing to buy anything, right? Now, 14 didn't go above 13, 18 didn't go above 17, 21 is so far hasn't gone above 20. All of these bars look to me as profit-taking bars and not bulls initiating a position. So bars like this are probably some measured move or some higher lows that are where bears are taking profit. So bears are taking profit here, bears are taking profit there. And then when a new leg down starts, they can reinitiate their short, put a stop at a lower place, and then sell again. And that's, I think, what a lot of these bears have been doing. So basically, for the rest of the day, as long as this continues, for the rest of the day, I would not look at buying anything. This is so strong that it will have a dominant effect over the market all day long. There's gaps everywhere. If you find more than 2 gaps in a strong trend, then chances are high that the whole day will be an all-day trend day, and that the day will close to the trend's extreme. So I'm thinking that today will actually close very close to the lowest part of the day. So what about trying to enter a short? Well, the best short of the house was arguably the short below 4, right? Sell below 4, stop above 4, and where are you? 20 times your risk, probably. The other short was probably below 7. The thing to realize there is what I set up before, is the fact that bulls that bought with a stop below 1 and entry above 1 had exactly 1-to-1, right? The more you can rule out bulls that are still fighting to get back to a position, the better, right? So bulls below 1, they took profit on a 1-to-1. The bulls above 3 had a stop either below 2, maybe below 1. And so you could actually put a sell order below 1, knowing that these bulls are trapped and that the market will go further down. At least some sort of a measured move, probably to here. And you can see a tiny little bit of reaction here. When we go further, the market is becoming a little bit overshooting a little bit, and then we get a new decision by the bears. So that's the best sell there. 9, well, although it wasn't an inside bar, it probably functions as an inside bar. So you can sell below 9, thinking that we're going to start a new leg down. And then you see a pullback. 13, you can sell below the pullback, knowing that all of the bears are trapped, and the bulls are trapped, and that the bears will take over. Better than to sell below 14, stop in this region and ride the train further down, and better to sell below 18. And even if that now produces a big bull bar, you can still get out below 18 on a break even. Why is that the case? Why can't you just sell below 18 and feel comfortable? Because the bears are owning the market. They are so strong, they'll orchestrate their own exit, right? So if you sell below 18, even when the market goes up or produces a strong bull bar within the range of bar 18, it comes back a tick below 18 and it gets you out break even, and then you can look to sell again. That is what, if the bears are owning the market, what will happen? And that makes it so comfortable to be able to sell at the lowest of the day. Okay. Worst thing you can do here, buy, right? All of this will be minor reversals, and in a couple of bars, we'll just go back and produce new lows. Even if this would go up all the way back into yesterday's range, that would still be enough opportunity to buy on pullbacks, right? And so you don't have to be the first one to buy. The thing to think about here is probably how will this continue, right? So you have a strong bear breakout. Well, what's the logical thing that comes next? Probably some type of a bear channel, right? Will it be a broad bear channel? Will it be a narrow bear channel? Well, the breakout was fairly large, so the channel could actually be quite wide as well, right? So the channel could be, and I'm just guessing here, the channel could be something like this wide, where every time it comes back to the trend line, you just sell, and you just hold for new lows, right? So at some point, this will probably move into a channel. If it doesn't move into a bear channel, what does it move into? Well, then it probably moves into a trading range. The last low or high will then probably be the high of the trading range, and the last low will probably not be the low of the trading range, will probably go a little bit lower. So this could be the highest point of a trading range if we now start to go sideways. That's another reason why this is probably not a good location for a stop. Is there any chance that there's going to be a huge bull breakout and that we're going to go back into, for example, the open? I think it's very, very low probability, right? This is basically vertical. This is so vertical that on higher time frames, this is so bearish that nobody is willing to bet and just buy into this. But Tim, we're at the moving average on the 60-minute chart. Yeah, it doesn't matter. Look at how fast we're coming down. That needs at least a second leg sideways to down, right? Look at how fast we came up to here. It's the same thing that goes higher. So don't start to blindly sell or buy because we're touching a moving average. That is not a strong location in this case to just start buying, right? In general, you need a setup at least. And if you're looking at the 60-minute chart, you would need a setup at least on the 50-minute chart. Well, the 50-minute chart is sell to close, okay? So this could just be the first leg of 3 legs down on the 50-minute chart. Well, if you see all of this and it's a sell-off of 90 points and you're going to get 2 more legs of this, we're going to be a couple of 100 points down very quickly, right? So don't buy anything into this. So bulls, better to leave the house and do something else. It's still sell for any reason. Sell at the market, sell below 18, sell below bear bar, sell below the low of the day, knowing that all of the bulls that are now starting to scale in have to exit. And let's start to look for some targets. So first target here, 54.90 area. Second target here, 54.60 area. And then all the way, of course, ultimately to the low of the week for targets. If you're in the GoToWebinar only, I'm going to open the questions box as well. So if you have any burning questions or anything that you want to have clarity on, you can ask your question in there, and when time allows, I'm going to have a look at that. The alternative is to be here in the Discord. If you are in the Discord, then tag my name, Tim Stout, and I will have a look at your question right there. The other thing, of course, with FOMC is that this is a interest rate event, right? And so when you are looking at, so we're just coming up to the lows of the day again. So traders will sell below 23, especially now that it takes out 22 low, starting to take out the 21 low. And then if it starts to take out the 20 low, it gets even better, right? You would want to see at least a measure move down to 5,500 area. Let's sell below 23, you can sell below 20. It might be, if you think about it, every low one, selling below every low one still works, right? Now, as long as selling below low one is still working, the trend is very, very strong. At some point, the low one will stop working and you'll try to sell a low 2 instead. When that happens, the market is signaling you that there's a change in behavior. So what was low 1 selling, breakout continuation, is now ABC pullbacks, right? A low 2 is an ABC pullback. The A is the first leg of the pullback, the B is the low 1, which fails, and the C sets up the second leg of the pullback and creates the low 2. So as soon as you now try to sell below 23 and the market reverses up, well, your stop is then above 18, and you probably will get back to that low and you can get out break even and you can start selling the low 2 instead. That is a signal that the market is changing from strong breakout to more channel or to more sideways trading range type of trading. All right, I was talking about how FOMC is basically a interest rate event, right? So the interest rates are, of course, defined by ZN. So let me create a new one at ZN. So always important to see or to look at what the ZN is doing on a day like this. Why is this data wrong? I just looked at it an hour ago and it was fine. Okay, so interest rates 10-year on the weekly chart, big bear trend, of course, interest rates rising. Remember, if the ZN is going down, interest rates are going up and vice versa. So big bear trend on the weekly chart. On the monthly chart, easier to see how we had a big plunge down into 3 legs. So careful first leg, huge second leg, and again a careful third leg. Final flag, right? Sideways, piano, and a bear breakout. And bulls are trying for a higher low major trend reversal now. So if this goes up, interest rates go down. We're back below 4%, I think, on the 10-year. And so on the weekly chart, you can see that we are already creating a big bull bar. We're going above this bear higher low. We're going above this bear higher low. So this is for me always a long, and it could go up a measured move back to these levels, which would be significantly lower interest rates. The interest rates have a correlation, of course, with the stock market. If you're a portfolio manager and you have money to invest, you can put this in volatile stocks, you can put it in defensive stocks, you can put it in bonds, and you probably have to all three, right? The big rotation that we saw the other week was mainly going from technical and volatile stocks into more defensive stocks. But there's also, of course, a rotation now going from stocks into bonds, which means that stocks go down. So that is probably playing a large part into what's happening today as well. Do you need to know all of this? Not really, but it is fun to think about things and fun to see how things are moving. You don't need to. You can just sell below 4 and be happy as well with your 90 points profit, or sell below 7 or sell below 14, not knowing what's going on. Do I look at other charts while trading? Nope. Right? I don't need to know what the Dow Jones is doing. I don't need to know what bonds are doing if I'm trading this chart. But I do like to think about markets, to see what charts are doing, to especially laugh at what the media makes of an event like this. And so I just enjoy all of these tiny little things and think about what might be happening. Just like the end of January on the chart that I showed before and how that correlates to today, it just gives me a bias and it helps me to hold shorts in this case for the whole day because my experience says that today might be a big bear trend day. All right, so how about this? We're going sideways now for 5 bars. Well, bulls are not getting happy from 20. Bulls are not happy with 21. Bulls are not happy with 22. We don't even go above 22. So as soon as we go below 20, and we already did, bulls that got long into this got trapped and will exit, right? So some of them will buy more, get out of this mess, but most of them just will give up and go home crying. And bears will now start to take over. Will the bears sell below 23? Definitely, right? Will it be a big short? It depends. It could be that we're now transforming into more of the channel phase. So it could be that this low 1 might actually fail and that we need to sell a low 2 instead. If you're selling below 23, stop is above 18 or below or above 17, which is now not the skunk stop anymore. The skunk stop is now above 23 because we just made a new low, right? So what are bears thinking that the selling below 23? Well, the bears are thankful that the entry bar is a bear bar. They don't like so much that it's not a bear bar closing on its low. Most bears will give it a bar or 2 more to see what happens. And if there's now a big bull bar, they will exit, break even a tick below 23. Right now, if you have your stop above 18 and you have your entry below 23, 86.50 or somewhere in this region is your profit target. Another profit target to use is probably 15 or 20 points below 23, which would be in the 91.50, so right at around my targets. I think 20 points right now, right, considering the volatility and considering the range, instead of 10 points is good enough of a profit target. 50-minute chart, we had 1, 2, 3, 4, 5, 6, 7 bear bars now. And what do you see about the last bear bar that we just printed on the chart here? Let me open up this chart here. So we printed sell the close bear bars, but there's something special about this bear bar that makes it different from other bear bars, which is important. It is the fact that this bear bar closed within the prior bar. Exactly. Some people have it correctly. That could signal a temporary end of this spike. It could, right? Look at this bull rally. As soon as you see a bull bar close within the prior range, you get a little bit of a pullback before you get the second leg up. Sometimes it just continues for a bar or so more and then comes back. But in a buy the close rally or in a sell the close rally, I always exit when I see a bar close within the prior bar, because it could well be the end of a move. Every time bears created a lower low, and although they created a lower low on the line chart, it closed within the range, so this might become a trading range for a couple of bars before on this chart the second leg down starts. So we're probably in some type of temporary trading range. We might be in the start of the channel. 18 would then be the start of the channel and go in some type of fashion like this, where we just start to drift down more and more. And at some point, it means that bears will decide that selling makes sense, but only selling higher up makes sense instead of selling the lowest tick of the day. And until now, selling the low ticks and selling the low ones was a good strategy. But right now, they probably need to scale in, or they will just take break even when it comes back to the 23 low. So Al just entered the room, but we can't hear him yet. Stand by, everyone, so that we get his audio issue fixed.
Okay, can you hear me now?
Yes.
Okay. What I was saying is that we had a tail here, a doji bar here, so that was another tail here. So the trend was losing some momentum, and then it accelerated down, and then a second leg and a third leg. And when you have 3 legs down, you're probably soon going to get profit taking. So there's probably not too much left to this leg down. We're testing different support. This is the open of the week. We've been basically sideways for a couple of weeks now. You can see on the weekly chart, we have 2 sideways bars here. So there's probably not too much more down here. And so wedge bottom or 3 legs down, 1 pullback, 2 pullback, 3. You typically are going to get a couple legs sideways to up fairly soon. And then this is really interesting. You get these little dojis. That's a neutral bar. So instead of the bears being clearly in control, now the bulls are just as strong as the bears for a couple of bars here. And when you get doji bars late in a bull trend, that's a sign that, late in the bear trend, it's a sign that the bulls are starting to become as strong as the bears. And you can also see the bodies are getting smaller, so the momentum down is becoming less. So, we may go a little bit lower, another 2 or 3 bars lower, but we're probably going to begin to go into a trading range. Here are 3 things that can happen. We have a bear trend from the open. Here are 3 examples. 20% of the time, if you get a bear trend from the open, all the bottoms fail and the market continues down. So 20% chance that we're just going to keep going down and down and down. And 20% of the time, sometime in the middle of the day, you get a reversal. With the selling as strong as it is today, if we do get a reversal, it's probably not going to get anywhere near the high. And 60% of the time, when you have a big collapse on the open, the market will go sideways for at least a couple hours, often for the rest of the day. So of the 3 possibilities, 20% what we have now will last all day, 20% will get a reversal, 60% we're going to go into a trading range at least a couple hours, possibly all day. So most likely we're going to enter a trading range. And we have 3 legs down here. 1, and then a bull bar, a pullback. 2, and then dojis and a bull bar. And now we're in the 3rd leg down, looking for the bottom. We're testing the low of July 1st. That's the low of last week. That's not really, I've already put in, this is actually, okay, this is the low of last week. There are 2 lines here. You can't see them. They're so close together. But basically, it's the low of last week. So chances are not a lot more down. Now, at the end of June, all through here, this is the daily chart, all the way up, we kept getting reversals. And every time we got a reversal, I said, it's probably not the end of the trend. We're probably going to go higher. And even when we had this reversal, I said, it's probably not the end of the trend. This is a really strong trend, so we're probably going to go higher. However, back over here, the last day of June, which day is it? Yeah, right. This is a Friday, I think. And over here, I recorded a video, and I said, we conceivably have 3 legs up, 1, 2, 3, and we have an outside down bar. I said that at this point, I thought there was a 50% chance that either this was going to be the end of the trend or we'd go a little higher, and that would be the end of the trend. Instead of 3 legs up, 1, 2, 3, it looks like the count got reset. So now it's 1, 2, 3. So on the daily chart, we have 3 legs up. And here, the bears tried to get a double top. We broke out above it. And instead of a double top breaking below the neckline and falling for a measured move down, if you break above a double top, you often go up for a measured move. And you can see the high of this rally is almost exactly a measured move up above the double top. So we have 3 legs up to a double top. And then if I look at the weekly chart, this is going to be the weekly chart. We have 3 legs up, 1, 2, and 3. Let me put up the weekly chart and put on the actual weekly chart. Weekly chart, a really strong rally since a couple of years ago in October, and then a super strong rally since last October, and 3 legs up, 1, 2, 3. So on the, I got to move this out of my way. You probably don't see the go to where our tool are, but I got to move it to the side. So on the weekly chart, we have 3 legs up, and the 3rd leg up is 3 legs up on the daily chart. So 1, and then a bear bar, 2, and then a bear bar, and 3. So we have a nested wedge. We have a small wedge within a bigger wedge. And this is also a wedge on the monthly chart. Monthly chart, 3 legs up, 1, pull back, 2, pull back, 3. It's the same wedge that's on the weekly chart. I think, when you get a reversal, when you get 3 legs up, you have 1 leg up and then profit taking, 2 legs up and then profit taking, 3 legs up. Normally the profit taking after 3 legs up is bigger. You tend to get more profit taking. You tend to get a deeper pullback. So typically you're going to get a couple legs down. And a couple legs down on the monthly chart would be at least 3 or 4 bars down. So 3 or 4 bars sideways to down, that's 3 or 4 months. I said that, I'll use the weekly chart to make my next point. Here, 2 years ago, we had a huge sell-off into October, and then a very big rally. Last year, we had a big sell-off into October, and then a big rally. So what do you think a lot of the traders and computers are thinking this year? They're thinking we're going to get a sell-off into October, and then a big rally, a continuation of this trend. However, there's a problem with that. Whenever the market does something 3 times in a row, and it does the same thing the first 2 times, everybody expects it to do the same thing the 3rd time. And it usually doesn't. It usually does something different. So let's say a company has bad earnings reports, and then next quarter a bad earning report, and then it sells off those first 2 times. and then the third quarter has a bad earnings report, usually it's not going to sell off. If anything, it may reverse and go up on the bad earnings report. So you always have to be suspicious if the market is repeating something that it's done 2 times before. You're going to be suspicious that it's not going to do the same thing. So what does that mean? So October 2 years ago, we rallied. October last year, we rallied. If we put a bottom in October this year, and we're going to do something other than a rally, there are 2 other possibilities. We just go sideways or we go down. I think we're probably coming down here, which is around 5,000. Let me go to the daily chart. And I think we're in the beginning of a move down to 5,000, which would be about a 10% correction. So this is the 5,000 area. And on the weekly chart, the wedge is 1, 2, 3. And when you get a reversal from the wedge, the market tends to test the start of the final leg up, which is down here, and it's right around 5,000. So there are 2 reasons to get here. So I think that's where the market is headed. You know, we may go up here first. We may go a little bit above it. I don't think we're going to go a lot above it this year. We may have seen the high for the year. If we do go above it, I don't think we're going to go a lot above it. You know, maybe 3% above it or something. And one other thing about 5,000 is, the high is 5,700. 5,000 is about a 10% correction. And a lot of times the market will gobble up 10% corrections. There are a lot of traders who they have cash and they don't want to buy at the high, but they look for pullbacks, and a lot of them look for round numbers, 5% pullbacks. We're at 5% now, and that's why we got a bounce here. A lot of cash was deciding that, well, I don't think it's going to go down 10%, so I'll use my cash to buy at 5%. Well, they didn't get much of a rally at 5%, so I think we're probably going to come down 10%. This is a little bit more than 10%. It's also 5,000 big round number. So I think we're heading down here. This dash line is the 50-day moving average, the 100-day, the 150, 200-day. So the 200-day is also in the neighborhood of that line. That collapsed last year in October, fell below the 200-day moving average. And the collapse a couple of years ago fell below the 200-day moving average. So that's another reason why I think over the next few months we're going to get down to the 200-day moving average, the 5,000 big round number. I think that's where the market is headed. Would I be surprised if it starts to do this again? No. I never get surprised by anything the market will do. All I do is I change my opinion. My opinion all the way up here was we're going to get a new high, we're going to get a new high, we're going to get a new high. And here I changed my opinion because of the nested wedge. I said that either we're going to go down or we would go up a little bit more and then go down. And I still think that's what we're going to do. I think we're going to get at least a couple legs down. We have a wedge on the daily chart, so at least a couple legs down on the daily chart. But we have a wedge on the weekly and monthly charts. So I think we'll get a couple legs down on the monthly chart. And to get a couple legs down, it takes at least 3 months. So if we started in July, August, September, so I think we'll go down at least into September. And because we bottomed the past 2 years in October, I think we're going to go down into October. And I think in October we'll be in this area. And will it be a buying opportunity? It probably will. I have a friend, one of my college roommates. He went to law school, became a lawyer, a really likable guy. And he became a trial lawyer, personal injury lawyer, and he made a lot of money. And I never thought he was very bright. I still don't think he's very bright. But, because he was such a likable guy, I think he made a fortune in his lawsuits. And he's now a very rich guy. And what he's done his entire life is he makes more money than he spends. So he lets the cash accumulate. And then when the market goes down 10%, he buys stock and he does it all the time at 10% down. During the pandemic crash, over here, he told me, when the market is here, it was down like 10%. He said, Al, I just bought all my cash and I bought stock. And I said, it's going to go down 20 or 30%. This is a serious problem. This is a huge bear bar. We're going to go down 20 or 30%. We went down 35%. He said, yeah, Al, I don't care. All my life, every time it goes down 10%, I buy. And within a year or two, it's at a new high. So I've made a lot of money doing it. And he's right. And that's what happens. A lot of times you get these moves down. This is probably like a 10% correction. And 10% corrections come about once a year. 20% corrections come like once every 5 years. 30% corrections, like we had in the pandemic, tend to come every 10 to 20 years. So whenever the market is down 10%, it's smart to buy. When it's down 20%, you got to buy. And when it's down 30%, you got to buy every penny that you have, you got to buy, because this is a rare event. Can it go down 40 or 50%? Sure. But it rarely ever does. Let me show you. Okay. Back here, it fell about 40%, and this low is about 40% from that high, but this low is about 55% from the all-time high. And should you sell your stock when it's doing this, or should you be buying? You got to be buying. A 50% correction, that is so rare. It's probably the first one since the Great Depression in the 1930s, where the market fell 55% down from the high. And can it go down to zero? No. Why can it not go down to zero? The Fed won't let it. Okay. All of these big corrections, they end by the Fed taking action. Pandemic low, what happened? The Fed was giving money away. They're basically printing money. The Fed doesn't print money. The Treasury prints money. But the Fed has balance sheets and they can give credits. Basically, they're creating money. And that's what they're going to do. So that gives everybody who owns stock protection. It prevents the economy from collapsing. Is it always going to work? Sure, it's always going to work. Because the Fed and the Treasury can always print enough money to prevent the stock market from going down. So when the stock market goes down a certain percent, the Fed is going to do something. Sometimes if it goes down 10% and went down 10% 3 times in here, 2014, 15, 16, down here, 20%, down here, I forgot what this was. Maybe this is 20%, maybe that was 10, maybe this is 20. And then this was 35. The Fed is going to act. No one knows where they're going to act, but everyone who's been in business for any length of time knows the Fed always wins. The Fed can always print so much money. It could be like Argentina, and you can have 1,000% inflation, and that can happen if the Fed prints too much money, and that's what happened. That's why we got all the inflation going on now. We have an idiot as the Fed chair. Powell is a fool. After the pandemic, he kept basically interest rates at zero, and he kept quantitative easing. He kept making tons of money available to companies for basically no interest. And all through here, if you read my stuff or if you listened to me, I kept claiming that he's an idiot. The economy is really, really strong, and all he's going to do is create a bubble of inflation. And that's the bubble finally burst over the past year or so. The inflation finally came, and it was all because Powell kept interest rates way too long, and he made money too easily available to corporations for way too long. And then when he started to unwind it, letting interest rates go up and making money tight for corporations, and that's why we got all that inflation. And there's no cure for the inflation. Okay, this is probably the low for the next couple of hours. So if you buy, You could either trade small and don't use a stop and buy more lower, or you can just, put a stop below this. Or if you want, you could wait for the 15-minute bar to close. It closes in about 8 minutes. If it closes near its high, it would be a buy signal bar. You can call it a parabolic wedge on sell climax. Around a measured move down, we have a double top. Here's the neckline. Measured move is here, so we're more than a measured move down. This is the Globex 15-minute chart. But if this bar closes near its high, we'll probably go up at least to the top of the most recent sell climax, which is here, 55.15, 55.20. And we're probably going to be sideways. It could be sideways to down, could be sideways to up, but we're probably going to be sideways. More, if it's going to be tilted slightly up or down, it's probably going to be tilted down. But for the next couple of hours, possibly for the rest of the day, we're probably going to be, the bear trend is going to be on plus. So it's possible this is the low of the day. As I said, 20% of the time, when you get a huge sell-off on the open, you'll get a reversal for the rest of the day. 20% of the time, the bear trend just continues all day. And 60% of the time, a big sell-off on the open. You reach whatever target the market was trying to get to, and then it just goes sideways. So then tomorrow we have the unemployment report, and the market will try to be neutral ahead of the report. So that increases the chances that the second half of today will be sideways. The market will reach some target where the market thinks it's neutral. 60-minute chart. We rallied here, and we sold off to the 20-bar moving average. We're dipping back to the top of the trading range. We're around a 50% correction. We have a bad buy signal bar here. We're testing the high of that bad buy signal bar. So there are a bunch of reasons here why the market might stop going down here fairly soon. Tomorrow's Friday, and so what happens at tomorrow's close determines whether the week will remain a bear bar. So will we have 3 consecutive bear bars? We had 3 here, and we rallied. Will we have 3 here? I don't know, but I do think that we have a clear wedge. A lot of times, if the second leg up of a wedge is really strong, it becomes a new first leg. And this is an example. We have a very strong second leg, so the market may be saying this is no longer important. This is important, so it's leg 1, pullback leg 2, pullback leg 3. So we may go a little bit higher, but I don't think we're going a lot higher, and I think we're probably going sideways to down into October. So I don't think there's any big rush to buy. 5-minute chart, it's okay to be long here. We're probably going to get a couple legs sideways to up. Might get up here, might get to the 2 moving averages. It may take an hour or so to get there. I don't think we're going to go straight up. We'll probably get a couple legs up and basically sideways for the next couple of hours. And tomorrow, Friday, the end of the week. I want to say I removed the open of the month here, but you can look at the monthly chart here, and you can see yesterday was the final day of the month, and the month has a small bull body. And for a lot of the past week or so, it's had a bear body, and the bulls bought the market into the final minutes of the month, and the month ended up with a bull body. It's not a strong bull body, and I still think we're going to go lower. As I said, we may go a little bit higher first, but I think we're going lower. We have a breakout here. What did we break out of? Well, we broke out of 2 things. We obviously broke to a new all-time high, but we also broke above this. So you might get a measured move up. So here and then a measured move up. Did not quite reach it. If we get one more leg up, maybe we'll get there. I think right now it's more likely we're not going to get the one more leg up. When the market reverses, I said you'll probably get a couple legs down. That should take at least 3 or 4 months. But it also tends to go back below breakout points. Here's a breakout point. and that's around 5,200. Was it around 5,100, 5,200? So we should dip below that breakout point. But this breakout, look to the left. What did it break out of? It broke above that. It also broke above this. And this is at 48.64. I think we're probably going to come all the way down here. So I think it may be more than a 10% correction. After the pandemic, we had a huge rally and a big sell-off, and this low did not go below the breakout point. Here's the breakout point right before the pandemic. Here's the pandemic. We have a very big breakout and a reversal down, about a 50% correction. It did not go below the breakout point. Very strong bull trend. This bull trend is weaker. We have a lot of selling in here. We have selling here and here. So we should dip below this breakout point. And I think we'll come down, and I think, we may dip below this one as well at some point in the next 6 months or so. So I want to make one final point. On the news, whenever the market is doing this, they put on experts on TV and they say, oh, the market's going to go a lot higher. And then it does this, and the guy's wrong. And right now, if you put experts on TV, they're saying the market's going a lot higher. And if it does this, they'll be wrong. My point is that when the market makes a top, everything is bullish. The earnings reports are good. The news is good. The Fed, the interest rates are good. Everything is good at a market top. And then suddenly, all of a sudden, they put bear people on TV, and all they talk about are all the terrible things going on with the economy. And so right now, they're still mostly talking about bullish things, reasons to buy NVIDIA, reasons to buy Meta. But if we start to go down, you'll hear them talk entirely differently. So what they'll say is, well, earnings were just not quite as good as people thought they should be. Ford was terrible, Tesla was not so good, Microsoft was disappointing, and maybe NVIDIA got far ahead of itself. Maybe everyone knows AI is going to make companies spend a lot of money, CapEx, capital expenditures, to try to be ready to capitalize on the benefits of AI. But maybe they've already bought more than what they can use over the next year or two. So maybe we're going to pause, and maybe that's going on. And then you got the issue of tariffs. And nobody talks about this, but if President Trump wins the election, he's talking about 80% tariffs on China. So, if you're an American company and you're faced with the possibility that everything you buy from China is going to be 80% more expensive come January, what are you going to do this year? You're going to buy a whole bunch of stuff, a lot more than you normally would buy, because you'll probably buy the next 2 or 3 years worth of stuff before the election, before we change presidents, because of everything's going to become a lot more expensive. President Biden is also talking about increasing the tariffs on China. He may not do 80%, but maybe he'll do 50%, 60%. But in any case, anything that any corporation is going to buy from China is going to get a lot more expensive next year. So part of this rally might be, I don't know, I'm an eye surgeon, I'm not an economist, but part of this rally, it seems to me, could be from companies buying 2 or 3 years worth of stuff this year, because over the next 2 or 3 years, all that stuff is going to be a lot more expensive. And the opposite is true with China. If we're going to increase the tariffs on China, they're going to increase the tariffs on the United States. So if you're a Chinese company and you got to buy stuff from the United States, are you going to wait for it to become 50% more expensive in January, or are you going to buy it now? So a lot of this huge rally that we've had might be companies front-running tariffs that might come into play next year. And if that's the case, then all the companies are going to be spending a lot less next year. So if a company is buying fewer chips, the chip companies are going to make a lot less money. right? If companies are going to be buying fewer trucks, fewer anything, and also if there's fewer stuff being bought, there's going to be less shipping. So the transportation, shipping, all that stuff will make less money. So that's just something to keep in mind. The bulls made a scalp. So what? And well, it's important because in a strong bear trend, it should be very difficult for bulls to make money with stop orders. And here, the bulls made money with stop orders. They went up enough for them to make at least 5 points. And then here, we have a bear bar closing near its low and a bear trend, and you think, oh, it should go lower. Instead, look what happened. We have a sell signal bar, and they bought it, right? That doesn't make sense, right? So maybe we're not in a bear trend at the moment. So also, this is a bad-looking buy signal bar. Whenever the market rallies from a bad buy signal bar, it normally comes down and tests it to see if people will buy it again. Well, did they? Yeah, they bought again. So this is another reason to believe that the bear trend has ended for the next couple of hours. The bulls are hoping that it'll lead to a major reversal, but more likely the first leg up will stall around the 2 averages and around here. And then traders will decide if the first leg up is really, really strong and we get a resumption down, a lot of bulls will buy it. Maybe you can get a major reversal. When a bear trend is this strong, this many points, this many bear bars, and you get a reversal, it's much more likely the reversal will lead to a trading range than to a bull trend. So back to where I started. We've got 3 possible outcomes when you have a big sell-off on the open. 20% of the time it lasts all day, 20% of the time you get a reversal, and 60% of the time you're going to get this. So it looks like we're going to get this. I think that's what we're going to get. All right, so I got to go. Got to get back to work. So I'm going to drop out of the webinar, and you guys can continue with the 2 Tims and Brad. Have a good day.
All right, thank you, Al. Let me just get back to my trading room setup. Well, why don't you share your screen? All right. All right, thanks, Al. That was great. Little bonus performance here by Al Brooks. So in the meantime, we sold off a good, 15 points below 23. So the last lower high is now here at the 23.22 high. You can see that market is changing. Look at the big sell-off 10, 11, 12, 13, 14, 15, big bear bars closing consistently lower, 18, 19 as well. And then the rundown from 22, right? Overlap, 23 overlap, 24 hugely overlapping 23, 26 overlapping half with 25, and then big move down on 27 with follow through 28 being disappointing. The market is transitioning into what is likely to become a trading range. Okay, high of the trading range, probably here, low of the trading range, probably a little bit lower than the lowest of today. And you can see that as well. So once you see these bars forming more into what will become a trading range, you probably will not going to find bears below a low 1. Okay? They were still showing up here below 23, but they are looking at the sell-off as well, and they're seeing that the sell-off is weaker than the sell-off before. So will bears sell a low 1? No, they probably won't. And they found actually more buyers than sellers below 30. And so the market is looking now for what will be a low 2. As long as we stay below the 23 high, then the bears will still sell, but they'll sell now closer to the average price. Look at the average price, the moving average since bar 8. We have been drifting further away from the average price rather than closer. And so this is so extreme and so climactic that at some point, especially when we're seeing markets coming down like this, bears are only willing to sell closer to the average price. The average price is still below the 23.22 high. I think safer to have a stop if you can around here. We might actually take out this level, and then bears will sell higher instead of low, right? So the market has changed. Instead of selling low and covering lower, bears are now only willing to sell high and cover at new lows or cover somewhere in the middle. Can bulls buy here? I don't think so. I think this is already too high up after this bear trend, so I think this is too high to buy in that sense. We're coming back to this little final flag, so sideways for a number of bars, a breakout and a measured move down. As I predicted, it was going to go to this measured move target 99.75. There are still levels below this, and what happens very often, if there are obvious measured moves right before reaching them, the market will pull back strongly, making you wonder if you should take your profit instead of holding for the measured move, and then later on it plunges and touches that measured move after all. So I still believe that we can go below bar 28 today, but I do think that the bears have shifted into selling as high as possible. Some bears will just sell above 30, above 31. Some bears will wait for a clear high, for a clear low 2, or maybe even a clear low 3 after a wedge pullback. Right now it's a two-legged pullback, so an ABC correction, A 28.29 30 high. The B is basically the downside on 30 and then the 31 low, and the C is currently 31 and 32. This might be too strong, 31, 32, to immediately create downside, but at the same time we're coming in the top third of this leg, and so it's interesting for bears to start selling. 60-minute chart, very strong follow through on the signal bar, so bears holding on the 60-minute chart. 50-minute chart basically still sell the close, right? The first bull bar here triggered, and then the bears took profit at their last sell the close bar. So you sell the close, sell the close, sell the close, sell the close. As soon as you see a bull bar, you stop selling the close and you take profit at your final close, and you would have made a heap of points that way. So 50-minute chart, very climactic, but profit taking. 60-minute chart, good follow through, but still a lot of time left. 60-minute chart here, very good follow through. Did we already reach a 1-to-1? Yep, we did. So if you look here on the chart, the first 12 bars are an hour, right? 12 5-minute bars is 1 hour. If you look at this chart and you can envision what that hourly bar looks like, well, the high of that bar is here. The close of that bar is on its lowest tick, or almost on its lowest tick. So it's a huge bear bar. You can see that here as well. Now, if you sell the close of that bear bar and you put your stop above that bear bar, you would want at least 1-to-1, which is 98.75. Right? You can see that we're hesitating around that 98.75 as bears are determining, are we going for 1-to-1, 98.75, or are we going for 2-to-1, 47.50? It's going to be determined by the next hourly close, which will be in 18, 19 minutes. And so it's likely that we'll come back at least to that 1-to-1 price here, somewhere at the 27 close, I think it was. So bulls will probably be exiting very soon, because this is going to come down and it's going to hover around that 1 hour price as we're determining what the close of this hourly bar will be in 18 minutes from there. Overall, market is still always in short. A bear trend is a bear trend until it's no longer a bear trend. The probability is still on the sell side, but you are probably now in the trading range. Bears are selling higher instead of just selling at the lowest tick for continuation of the breakout. The breakout has basically ended, but if this is a channel now, it's still a very steep channel, right? And so this channel on a higher time frame is still a breakout. What are the chances that this is just going to go sideways? Well, if it is, it's going to go sideways and not much higher probably than here or here. I think a day like this is not going to have a big bull reversal. As Al was talking, I was going through some of the questions that were posed in the questions box. Interesting question here. If you could choose one setup to trade for the rest of your life, as the low 2 is setting up, by the way, this low 2 is going for the 30 low, and it might just go for our 87, right? So bears will try and sell a low 2 there. If it triggers as a nice bear bar closing on its low, they'll sell one tick below 33. Back to the question. If you could choose one setup to trade for the rest of your life, what setup would that be? That's a good question. It would probably be, I don't know, because the best setups don't occur very much, like things like this, where you just sell a low 1 and it just runs for hundreds of points. On the trading range day, you have these nice little scale ins and field breakouts. I wouldn't know. I much more enjoy I enjoy it the most when my analysis is solid and the day does exactly what I thought it was going to do. It gives a sense of satisfaction and just know that your homework pays off. Do statistics apply to all assets in RTH? Yes. Do you do sessions in Europe time for the DAX? No, not at the moment. When do you look at 60-minute on Globex versus 60-minute on RTH? I see you have 60-minute and 50-minute open. Yeah, so I look at the Globex and I look at the RTH. I look at Globex mostly when there's a big gap. So like yesterday's open was easier to trade if you actually looked at the Globex chart, because on the RTH chart the stop is far away. Plus my my benefit, well, you decide how you call it, but I'm a European-based trader. It's 6:15 p.m. and I don't like trading very late. So if I use the Globex chart, I find patterns and trades probably quicker in the day than if I only look at the RTH. And so it just helps me to find some trades quicker, and I'll be looking at exiting right before dinner or reasonable time before dinner. That's just how I trade. In Europe, I already trade, of course, in the morning, the European indices. So I trade 2 opens in the day. 34, what about buying above 34? Well, it's an inside bar and it's a doji, and it would be for a third leg up. So I don't think a lot of bulls will be buying above 33. And if they do, they're probably going to be disappointed very quickly. This is profit-taking area for the bulls rather than initiating along here. Leg 1 is 29, leg 2 is 31.32, leg 3 is 33. Bulls are hoping to get to the 23 high, and even if they do, the bears won't mind. They'll be selling here, forming a double top, maybe a higher double top or a lower double top, but there'll be bears waiting here to sell back to at least the 30 low. What should a flat Walmart trader do in this situation? So that was posted around bar 15, I think. Just wait for a trading range bear flag with a good bear signal bar. Yeah, so I'm trying to see. So you asked this question in bar 23, right? So I would still sell below bear bars, right? So you could sell and go for a scalp, have your stop there. It's a bear trend until it's not a bear trend. So if anything, just scalp to the short side. Somebody reminding me that my Orlando presentation needs to come online. Yep, I'm working on that. How are you putting bar numbers on NinjaTrader? Ask that question on the Discord in the indicators thread, or just go to the same website that you used to sign up for this trading room, brookspriceaction.com. There's an indicator section on the forum where you can find the barcode. Can you provide link on how to join the trading room on a monthly basis? So there's not a permanent subscription. We'd like to give members the option to decide on a monthly basis if they want to join or not. So that means on the first day of the month, the administrator will put a new subscription link onto brookspriceaction.com, and from there you'll be able to subscribe to the new month. If you subscribe to the new month, you have access to every trading room session of that month and also to every session on a download basis. So you can download the sessions afterwards as well for the months that you have been a member until about 3 months ago or something. So you need to download them before they expire. So tomorrow, because today is a free day, the subscription link will be up tomorrow before the market opens. Tim, how were you trained as a price action trader? Did you learn it all from Al? That's a good question. Yes. So I was stubborn enough to take Al's learnings and then wanted to study it for myself. So I ultimately studied a lot of charts to come back to the same conclusions as Al already did, and I'm trading Brooks price action. This kind of a bearish day, what are the factors to consider that a possible reversal might happen? Well, there's a couple of lower highs here, right? This is a strong lower high. We had a strong new low. This is a strong lower high. We had a strong new low, and then this is one has a strong new low. If the bulls are able to break one of the lower highs, then I think that we're in the trade range. This is your low 2 that we've been waiting for. Can the bears trigger the sell and take us to the 30 low and maybe to a new low of the day? Or is the sell not even going to trigger? It is a wedge pullback for the bulls, right? 29, 31, 32, the second leg, and 33, 34, the third leg. So it's an interesting sell to take. But it is a trading range, and so at the lows, there will probably be buyers not too far below, or we'll just stop in the middle, or we'll actually find buyers, and then bears will try to get out break even. Bears trying to get 90.50, the low of 30. So some bears will have sold a bad sell, right? So this was a low 1 when the trading range was about to start. Some bears are stuck here. They probably have their stop up here. They sell more here. Why do they sell more there? Well, it's a very interesting price for them to sell. Because if they want to get back to their first entry, this is exactly a 1 to 2 entry price for scaling in back to your original entry. Your stop is above 23 and your target is where your first entry was, below 30. The high of 34 with a limit order selling there is 1 to 2 risk reward. And that is why they are selling there. And that is why the bulls get, basically they get overpowered by bear pressure. So some bears will take profit at their original entry, take profit on their scale in below 30. That price is 97.25. Some bears will hold for the low of the day and targets in this area. Right, so we just reached that price below 30. You can see that we're hesitating, that we're pulling back a little bit. So there are bears taking profit. That could take a couple of seconds, and then the market will decide, will we go further down or will this be it? All right, first flow of profit takers probably consumed. If the bears can now continue, we'll probably go to a new low of the day. And that will be 54.80 level maybe. Yeah. So 54.80-ish, 54.90-ish. Even if we come back into this range, chances are that we still go to a new low of the day. Because what happens to the bulls that did buy above 33? They probably have their stop below 31, and they just got stopped out. 96.25, 96. Okay, so market is looking for an area to sell with that as a stop. So that's probably in here, and then we'll go down. I think 54.80 and sub 54, around 54.90 is target area. You can also say, well, Selling below 34, I just use more discretionary a point system. So you sell 675, you want 96.75, 10 points, and you got there, right? In one bar. So 5 minutes, 10 points on a reasonable sell. Question, I sold below 12, and when 13 had a small bullish body, I placed a buy limit order on my entry and left the trade at bar 14, break even. In hindsight, that was wrong. How would you react in a situation if you had sold below bar 12? Well, sounds like you're not trusting your stop, and you probably didn't want to because it was all the way up here or up here. And so what you're doing is, in this leg down, you're selling at the end of that big leg down, right? This is a pullback, and it's better to then sell as the trend resumes below 14. So I think selling below 12 is bad. Selling below 14 is good. Even though that is the worst price, the probability is much greater of lower prices. When you're selling after a pullback, some bulls will buy that close, they'll get stopped out. So you're selling where a lot of bulls are getting out. You're selling as there's a new leg unfolding. So you're at the beginning of the new leg rather than at the end of the leg. And so you want to sell as soon as we go below 14. Your entry bar is a bear bar, so you decide to hold. Continuation on 16. You can get out if that's 1-to-1, but it's not yet, right? So you're doing the same thing on 18, or you add below 18, and the same thing happens below 23. Then here at 31, well, I don't think you want to sell it, but let's say you kept the system intact, right? So you sell below 31, your stop is here. All of this pullback is not what you wanted, so you place an order to get out break even as soon as it comes back, and you understand that you're now in a trading range or in a channel rather than in the original breakout. So you're only selling high in the prior range and not low in the prior range. The siesta is the best part of my day. Yeah, that's correct. That's a good comment. I think the siesta is not a hobby, it's a necessity. It's so scorching hot here that you have to stay inside. I get confused telling the difference between a minor lower high and a major trend reversal lower high. Can you please show us in the charts? Sure. There was not a very good one. So you're basically saying I'm confused between when is something a major trend reversal or when is something just a pause in a strong trend, right? Well, a major trend reversal, first of all, only comes if it makes sense, right? If you're at logical levels. So right now, the 15-minute chart is so strong that it doesn't make sense to expect any kind of reversal. This is just going to get at least a couple of more legs. But if a trend is going on for a long time, so you have a long trend, it collapses below a bear trend, below a bear channel, you get a break, and then a test of the low again. This break was so long, right? It can be long in time, or it can be long in how deep it pulls back, that bulls will try again to buy here. This was almost a trading range, so bulls will buy again new lows. Even although it goes lower, it ultimately just reverses back up to a new high. So I'll try to see if I can find a better example of a good trend day. So something like this, if the first rally after a long bear trend, so bear spike and channel, so you have the channel like this. None of these pullbacks come back above the previous lower high, right? So you have a lower high here, you get a new low, you get a new low, you have a lower high here, you get a new low, you have a lower high here, you get a new low, you have a lower high here, here, or here, but none of these actually pull back. So the trend is still strong. That's why it's a channel, right? The channel is just lower lows, lower highs, right? Bear channel. As soon as you start breaking these highs, now there is a chance of a major trend reversal. But until we start breaking any of the prior lower highs, I'm not expecting any type of reversal. That's why I said this one is key. As long as we stay below this one, we're effectively still in a bear trend, right? Because it's the lower high, the most recent lower high. If we break this one, Well, the definition of a bear trend is wrong. Like, we're not making lower lows and lower highs. So you can't say that we're in a bear trend. We're not doing what a bear trend is doing. But are we then in a bull trend? Well, maybe, but probably we're in a trading range. And so this is probably, if we break it here, it's probably going to be the high of the trading range and not the low. This is probably somewhere the low, 54.80. This might be the high of the trading range. I still think we're going to new lows and 54.80. Do you ever scale in all the time to the upside and to the downside? So profitable scale in and scale into a losing trade. But I do it with structure and with things. So if I would have sold below 31, I would be looking at this level and I would scale in below 34, take the short, get out break even on my first entry, and I manage the short below 34. I have trouble holding on to a winning trade. What's your advice to overcome this problem? Why don't you start with writing down where you think price is going to, and rate yourself on your thought, right? So I gave up on my short, but I thought it was going to 5,500. Okay, so if you are more right in those estimates than wrong, then why don't you start believing yourself, right? So you probably are better in your predictions and in your measurements than you think you are, but you need to overcome that fear. What about buying 36? I think it's a bad buy. I think it's a pullback from a short, right? This needs a second leg down. This probably needs a third leg down. We're probably forming some type of a wedge. Single legs are typically not reversal points. So this is a single leg. There's no 3 legs in here. There's no 2 legs in there. This is a single leg down. That is usually not what a bottom looks like. Usually a bottom forms in the type of a wedge. Now we just have a wedge pullback, 29, 31, 32, 33, 34. That usually already signals that we're in a trading range or in the beginning of what will become a trading range. This will probably be the high, but the low might probably be lower than 54.80. So that means that at the moment we're probably in the middle of the trading range that we'll know by the end of the day. So I'm not looking to buy anything in here. This is way too bearish. How do we determine if a major trend reversal for bulls is happening? Well, you need to overcome the bear channel, right? This is the bear spike. This is at the moment the bear channel. So the bear channel is forming like this. And so the bear channel needs to go on for a couple of more hours probably. Then you need a very fierce break of that bull channel, of that bear channel, right? A test of the low or even a new low. And then you need a signal for a major trend reversal. And then that only has a 40% probability. So will you get one today? I'm not very positive about seeing anything bullish today. Although bulls will try at the end of the day to form some type of a tail at the bar, this has a chance of going down towards the end of the day. How do you know when a bar is by the close or stop order 1 tick above the close? Usually safest way is, of course, to sell below a bar and to buy above a bar. Still looking for 54.80. This whole thing probably is looking for a measured move down. So the neckline being the 31 low, the range being the 34 high, 1550 to 96.25 gives 54.77. Let's move that line there. So I'm looking at 54.80 up to 54.77. Do you use 1 minute and 3 minute charts? Nope. 5 minute. This is my screen, but I'm trading as well. So you're not seeing anything different. Other than that, I have the moving average here. Well, yeah, I have the moving average back on my charts as well. So yeah, no, this is pretty much the screen that I'm using. Should beginners focus on mastering certain setups rather than trying to trade the whole cycle? Yes. Focus on what you really can detect from early days. Try to become proficient from there. And then work your way up. So the good thing about creating a new low of the day is that you know one thing for sure, all of the bulls are at a loss, right? That's the powerful thing about a new low of the day. The bulls that have bought anything in here on the 50-minute chart are losing money now as well if they're still holding. And so there's a chance that we'll actually go a measured move down this whole range to 54.70 instead. Now, will the bear channel form like this? We don't know yet, but at the moment it looks to be that way. So we might soon come down and test some of these areas lower. Because it's a trading range, there's always bulls scalping the low of the day, right? But one thing you know is we just had a new low of the day. So like I said, it's a bear trend until it's not a bear trend, and the probability is always still with good shorts, right? So the short below 34 is still in effect. These bears are still holding. Can you short below 37? Well, you can, but you probably need a wide stop, either above 34 or above 23. And so it's a low one, again, for continuation of this range. The right seller, I think, is below 34. We might just come up here and start selling again on a low 2 and form a new low. Some bears will lower their stop now to the high of 34 because we just made a new low. They can do that. You don't have to, right? You can stay comfortable with your first stop. If you lower your stop, it allows you to add more contracts, right? To keep your risk the same. There was an earlier comment. It wasn't necessarily a question, but I think it was a comment on like, hey, if markets are moving in tandem, can I just look at a E-mini chart and then short Nasdaq? The answer is big no, right? Every market is unique. It has a unique composition of instruments, and it trades in a unique way. And higher highs and higher lows and exact double tops can be very determined. That can determine the price action big. And so you don't trade one index looking at another one. That is absolutely fatal to your results. And there are an extreme high amount of people in the trading room today, and so there's also an extreme amount of questions coming our way. I'm not going to answer all of them, and certainly not the ones that have nothing to do with the price action today. I'm sorry, guys, but I need to filter. So if you don't have your question answered, if you would decide to join the trading room or join us another time, then probably it's going to be a little bit more quiet then, and chances are that we'll have more time to answer your question. All right, still coming down. One of my important levels is here, so that's being reached. How are we doing on the weekly chart? Well, the weekly chart is already a bear bar by now. I still think it's going to be a big bear bar, so chances are that today, tomorrow, we'll continue the selling. Another look at the hourly chart. So 1, 2, 3 hours now going down. Fourth hour, well, still 50 minutes left. So fourth hour, we can't really say anything about. One thing we can say is that, look at this. As soon as the bar closed, the bear sold, right? It went a couple of ticks above, maybe a couple of points above, but this is limit sell. As soon as this bar closed, bear sold. And as soon as this bar closed, this closed at 55.02, the high of the current hour is 55.02. So bears are selling market order as soon as the bar closes. That is an extremely strong trend and can go a lot lower. Look at this, same thing, right? So by the fourth hour, we went down, what was it? 100 points. Now this is so strong that it's going to probably go down at least to 54.60. And my assumption is still that by tomorrow close, we will be at the low of the week. But we'll see. I trade what I see, not what I think. But I think at the same time as well. Is the trading room open every trading day of the month? Yes, US market, right? So if the US folks are partying, then we're closed. But yeah, there is a session every day. Sometimes it's full day, like today. Sometimes it's half day, so morning hours US. You can see the schedule on the website. All right, so we're coming close to my target of 54.80. Will we find buyers at this provisional bear channel line, right? Mind you, it's a provisional bear channel because I only connected the highs and connected one low. We don't know if it's going to be a bear channel, but it might be. And I have a big line here. Where's this line from? So you have the high of a range, you have the low of a range, and so I'm drawing lines here to this range, and I had it a little bit higher originally, I think, 91.25. So we had a little bit of a pullback here, so I was wondering if that was the breakout target. There was also a big line here, so that might have been the breakout target as well. And this one, of course, so 78.50. Right, big up, big down, big up. This is a trading range by itself. As soon as we break here the neckline and start continuing down, this becomes the measured move target, 78.50. And then there's a bigger one. We have a breakout below yesterday's low, a little bit of a pullback, and then continuation. So there's a bigger measured move all the way from today's high to yesterday's low, 54.25 target. At the moment, I think we can reach all of those. You can see how the market has changed here. So still a collapse down in 3 big legs, and now a more of a channel phase. At some point, of course, the channel will convert into a trading range and come back to the start of the trading range. But that might be many days away. That might be an hour away. That might be 5 minutes away. You can't time that, and it's usually, if the trend is so strong as this, it's usually not going to happen on the same day. So for bulls, I still don't think this is a good market for the bulls, and it's better to sit at home and do something else. Problems with strong trend days is that your mind is risk averse. It always looks for the reversal with a 40-point bar. But the truth is, and everybody knows this, that trends have inertia and will just continue until you don't believe that they continue anymore, and then they continue a little bit further, right? And so the mistake on trend days is to find reversals. It's much easier to find with trend setups like 34, like 37, even like 23 and 24, because chances are still that the trend is going to continue. Even if you would have to take a loss and reverse to become a bull, there's still enough points. But this is just going to drift down over and over again. Every time you try to time the reversal, you'll see that it fails. Will we probably pull back into the previous lows? Yeah, probably will. Can you bet on that? Well, you can bet on it, right? So you can buy the 39 close, betting that will come back into the 28 low. And you're probably right. The problem is 1 out of 10 times you're wrong. And 1 out of 10 times will just plunge 40 points down. And these 5 points that you make now, and the 5 points that you make again, and the 5 points that you make again, are not going to outweigh the huge loss that you'll suffer scaling in and scaling in, hoping, praying by then that it's going to come back into the prior range. And that is what's being called a measuring gap, right? So a measuring gap is just something that shoots up and never comes back, like this, right? So here you're buying, thinking that will come back into the prior range, and you're right, and you're right, and you're right. And then suddenly you get 19, which is a measuring gap, and you'll actually get a measured move down from the middle of the measuring gap, 19, and it never comes back into that range. So that tactic is just very difficult to implement, because the time when it doesn't work, you'll lose more than all of the times that it does work. So on this day, I just put on my bear hat, and everything is a bear setup until it isn't, right? Until we go above 34, I'm looking to sell. Wedges in trends happen all the time, and usually they are just brief pauses before the trend continues. So don't look too big for reversals here. Don't look too much for a long here. Bulls haven't done anything except this pathetic little wedge pullback to make me think that we'll go up very soon. If the bears own the market and their current sell is below 34, there's another sell below 37, they will protect their sell, right? And they will come back, even if we go higher now, they'll come back to that low of 37 to get bears out break even. They did that selling below 30, right? So you sell below 30, you get stuck. Your stop is somewhere up here. And on a 1 to 2 level, what Fibonacci lovers probably explain as a 33 or a 66% pullback doesn't exist. It's just 1 to 2. That's where bears will scale in and get out break even on their first sell and make a profit on their second sell. And so the same will happen with the 37, that even if we go up and we stop a bull bar somewhere here or here, it will drift down one tick below 37 and then come up. That's the highly likely outcome when the bears own the market like that. Do you keep a bar 40, 42 reversal in mind? So a lot of days have an initial move towards bar 40-ish, middle of the day, and then reverse the other way. So here, bear trend, bar 40 and reversal. Here bar 26, but by bar 40 we hit the top and we started to drift back. Here big bull bar, a big bull trend, bar 48, reversal and come back down. This day is different. This day is so strongly bearish that there's not going to be any reversal. Still highly likely going to hit 54.80 and lower. I'm still holding for at least 54.80. Good question. Very good question, actually. What does this outside down bar mean on the 50-minute chart? Okay, so, well, this is a really good one, because think about bulls buying above this bar, which is a very bad looking bar. There's probably more bulls buying above that bar, right? And that outside down and stopped out. Well, that's a good sign, because if bulls cannot get out and they're getting stopped out, chances are of a measured move down or a test of this measured move down. So 54.70 on the 50-minute chart is actually a target. Some of these bulls will revert to bears, right? So when they get stopped out, they'll revert to bears and they want to have their money back. And so sometimes a equivalent distance down is what you'll get. This was 54.77, the measured move target. It's right at our provisional channel line. Can buy here, you can't take profits here, because we don't even know if this is the channel line, right? We just connected two highs, but we could have gotten this wrong. It could be a channel that goes like this, and then there's way more profit potential. So you can't trust this channel line yet, which is always the problem with channels, which is why I don't usually use them. But good to put it on the chart right now, because it's very likely that we're forming some type of a channel after this bear collapse. Where are you based in Europe? Well, I oscillate between the Netherlands and Spain, Barcelona, Spain. And I see you in Mallorca. We are melting here too. Swimming pools and air conditionings are the answer. Could you explain V-tops as well? Probably want to save that for another time, because we don't have one that's very recent, so I'll save that for another time. This is an interesting. Just got out. At one point I was down big, but now I'm at my best day ever. Should I just stop or push my luck? Well, you have two big hormones running through your body, right? Your cortisol one and your dopamine one. Your cortisol one was triggered when you were down tremendously, right? And so what you did, and I hope you did it in the correct way, but you traded on and you are now up where you were down before. Now you are, according to your post, and I can see it through the text there, you're loaded with dopamine, right? And dopamine is an addiction. Like, you can be addicted to dopamine. And so the question you need to ask for yourself is, does it trouble your reading, and are you still objective, and can you trade, or are you dopamine rushed, and is it better to step aside? Usually, after being, if you're a beginner and you were down on the day and quite large down on the day, and you're now up on the day, you probably want to step out, or at least trade smaller. But probably want to step out, right? Also, you learn more when you're not actively in a trade, right? When you're actively in a trade, every tick against you feels threatening, and every tick in favor feels like as a little dopamine thing. And so when you're not in a trade and looking at the chart, you're actually learning more because you're more objective as a beginner than if you are in a trade. So you need to be mindful of that. In general, you need to be mindful of your state at all times. Are you calm and collected, or are you emotional? There's still bulls scaling in at the new lows, trying to close the gaps. We have two legs down since 34. It makes sense that we get some type of a third leg down into these targets. Also, on a higher note, we have three legs down since 18. I'm not feeling any bullishness yet, but I do see that bulls that buy the close and that buy lower are able to get out break even. So I'm buying the 36 close, I'm buying more at the 36 low, price comes back at the midpoint for me to get out break even. I'm buying the 40 close, everybody sells the 40 close, so I buy more at the low of 40 and I get out break even. So that is the hallmark of a trading range as well, that you're able to scale in and avoid a loss. Should you do that? Nope, because you can still get an enormous big bear bar. But you have to be aware of these situations changing, that you constantly need to assess how strong is my short. If you're shorting below 34, well, you're looking for a place to take profit somewhere 54.80, 54.77. You're at, what are you? You're at 30 points. So you probably want to look for 40 points maybe, right? So all those things, 54.77, it would be your 40 points. If you're selling below 37, well, you're wondering, what should I do? Like, you're still good, right? You have follow through, two bear bars follow through. If you see a big bull bar into your signal bar, you probably want to get out below, a tick below 37. And that is the lowest short that there is on the chart. So the lowest short on the chart is below 37. All right, so I hope you have found some value in my presentation. Thanks Tim Fairweather, thanks Al Brooks for joining as well. I will now pass the baton, or give the shift over to Brad Wolf, who will stay with you guys, I think until the close, Brad, but don't go away. Brad is going to take over. I wish you all a good day, good trades, and see you in the pits.
Thanks for the discussion, Tim, as always. So, very strong trend day, and we're starting to get a lot of overlapping bars. 20, 21, 22, 17, 18. If you were listening to Al earlier, one of the important things that Al hinted at is 17 and 18 was the start of an overall trading range. Trading ranges can go down a long, long time. So what Al is basically explaining is the sell-off 17 18 on the way down. This is a bear channel, and channels typically evolve into trading ranges. Right now, I think we're probably going to try and test up. Maybe we'll get up to the 34 high, the most recent major lower high, or we'll go sideways in here. 5,500, that's an important round number. Therefore, reasonable to assume that we're going to go sideways around it. So here's 5,500. Go ahead and mark it up. Obviously, we're in a strong bear trend, and therefore shorts slightly favor the bulls. But the problem is we're getting deep pullbacks now. So less and less traders are interested in selling closes, and they're more interested in selling pullbacks. We have a low one short below 42, but I suspect probably more buyers below the low one than sellers. And I suspect we're probably going to go sideways and test back to 5,500 and the moving average. We have not touched the moving average since bar 9, and therefore the odds are we're probably going to have to touch it. Now, some of you are new to listening to the room or listening to me, and I'm not going to talk every second. And part of that reason is I want to make sure that the things that I say are grasped. In other words, I'm going to talk a lot about the always in direction, and I want that to be the focus point. So sometimes if I'm not saying anything, that is also either due to trying to limit what everyone's having to think about. In other words, if I talk too much, then you might miss what I was saying, or it'll just be hard to recall everything. So just because I'm not talking, at times it's a little bit intentional. Now, it's always in short. So let's talk about the always in direction. I'll talk more about it at the end of the day, but obviously it's always in short on the way down. And the rally above 28 is a minor reversal. And because of that, minor reversal above 28, some bears will exit and bulls will buy, but the bears don't have to exit. The bulls that bought either above let's say they bought above 31, a lot of those traders get out below the 34 low. Give me 1 second. Anyways, back to what I was saying. A lot of those traders would sell again below 34, and bulls would get out. And where do those bears who went short get out? Well, in theory, some of those bears are still short. Some of them would get out below 41, but it's a minor reversal. Now, we're in a bear channel, and we're getting a lot of overlapping bars. And we're far from the moving average. This is an area where I suspect bears are going to be more interested in profit taking or taking partial profits and bulls beginning to buy than an area where bears are going to want to establish shorts. It's possible we break to the downside, but with all of this selling pressure we've had today, I suspect we're going to enter a trading range. So while we could go a lot lower, I don't think we're going that much lower. If I had to guess, we're probably going to get disappointing follow-through after the 44 breakout. So far, good-looking bar 44, but let's see how many traders are going to sell the close, assuming it closes on its low. You can sense the hesitation. For the bears, I'd get out above any bar, and I think realistically, a lot of bears probably get out in this area that are always in bears. It's possible we go lower, but 44 has a tail below the bar, and 43 is not a great entry bar for the bears selling below 42. And it's a low too short late in a sell-off, so it's a possible final flag. Small pullback bear trend, yes, but far from the moving average with overlap. That increases the chances that we're going to pull back. Look at this bar, 45. We're 1 minute and 18 seconds into the open of this bar. And why aren't we racing to the downside? Well, we're not racing to the downside because traders think it's a possible wedge, 28, 39, 44. In more simple terms, if you're trading breakouts, you want to see momentum. If I'm going to sell low which is where we are. You're selling low in a bear trend, really a bear channel. If I'm going to sell low, I want to sell because the momentum is strong enough to make me think the market's going to go lower. I'm not going to sell here if I think the momentum is weak. So the longer we go sideways here, that'll increase the risk. And when I say sideways here, I mean sideways on 45. Every second that gets added to this bar not going down will increase the chances that bears begin to buy back their shorts and bulls begin to buy. Now, when I say bears begin to buy back their shorts, do I mean a bull trend? No. I mean a trading range and a test of the 44 high, 42 high, and the moving average. I think this is a difficult area for bears to be selling. Wedge bottom, 20, 28, maybe 39. Parabolic wedge, 35, 39, 44. So we're starting to get a lot of overlap. That increases the risk of going sideways. But again, I want to be very, very clear. I'm not advocating a strong bull trend. I'm advocating a trading range. And a trading range could rally to 5,500 and just go sideways for the rest of the day. Now, why am I advocating a trading range? Part of the reason I'm advocating a trading range is we're at bar 45. So we're a little bit past the midpoint of the day. And we have a very strong sell-off ever since the top of basically bar 6, let's say. What's the chances that the bears can keep the market at this price level, 54.80, for the next 40 bars or 35 bars? I think it's pretty low. In other words, the bears have to keep the market at this price in order for this day to close on its low. And this day be as strong. In order for the daily chart to close on its low, the bears have to keep the market at 54.80 for the rest of the day. And if we go sideways here for 40 bars, it's going to increase the risk of a reversal up. That makes me think we're probably going to have to pull back. Now, if the bears are lucky, maybe we rally and get a couple of legs sideways to up, and we go sideways in here, 55.05, that price level, somewhere in there. We go sideways for the next 10, 20, 30 bars, and then we get a plunge late in the day, closing the day on its low. In other words, we form a trading range with bars 28 to 45. We test the top of the range, and then we sell off in the final minutes of the day. Otherwise, I think for the market to just continue to sell off for the rest of the day without pulling back is going to be fairly low probability. So the question for traders here is risk. How much risk are the bears willing to tolerate? Obviously, strong bear trend. But if you're selling 45, look at 45. It's a good bar for the bears, but it's not exceptionally strong. And that increases the chances that we may have to pull back. It is follow through, but it's not as strong of a follow through as it could be. Now, why do I say that? I say that because 45 has a lot of overlap with the 44 breakout, so it's more of an inside bar. Always in bears, in theory, some of them are still short. They would exit above a bull bar, and 40 is not good enough. Some get out above 41, others stay short. Now, what are the chances 46 is going to be a strong bear bar? I think the risk is 46 is a reversal bar. If I'm a bear and I'm short or I sold to close at 44, I'm fairly disappointed by 45. If I'm going to sell low in a channel, especially far from the moving average, when the odds favor a trading range, I need to see the momentum be really strong. Otherwise, I'm going to be fairly quick to buy back my shorts. And that's what I think the market is deciding on right here. Very dangerous for traders to just be betting on a reversal. And so really, I'm thinking from the perspective of swing traders. I think most bears would rather wait and see 10, 15, 20 bars sideways to up and then look to sell. In other words, we have a bear trend. They'd rather see a trend line break and then a lower high and then a retest of the lows. if I was going to look for a swing trade, that's what I would look for. Because the odds are bears selling and scaling in higher, they should make money. The other reason why I think we're not going that much lower before we pull back is we had a fairly decent rally from the 28 low to the 34 high. And it's a trend line break. It's a lot of bull bars. Decent rally does not mean major trend reversal, but it's a strong enough reversal that it makes traders think the market's in a trading range. And it's fairly common for the market to sell off and get near a measured move from the 34 high to the 28 low, come close to a measured move down, go sideways, and then reverse and form a trading range. So we might, it's possible we test down to 54.70, that area, but overall, I think we're losing energy. And if the bear trend is losing energy, that'll increase the probability that we're going to pull back. By the way, I do have the question box open. I generally like to look at it later in the day, closer to the end of day review, but ask your questions there because I typically will go in chronological order. So ask your questions there and I'll pick most of them and try and answer as many as I can, either right before the end of day or after the end of day review. And stick around. Once the market closes, I will post the end of day review and go through the bars. One of the things that I noticed, there was a question someone asked Tim Stout regarding, I can't remember the question exactly, but it had to do with emotions. And one of the things I want to say with that is, it was a question that had to, actually the question was, once you have, should you ever stop during the day? If you're doing well and you make, let's just pick a number, you make 20 points, 30 points, should you stop trading for the rest of the day or should you keep trading? And I think the way most traders view that, certainly the way I view it, is a performance metric. Not so much how much you made, but more or less, how are you performing? And when I say performing, what I pretty much mean is, are you following your rules? Are you trading in a logical way? Where you look at the market and you say, yeah, this is logical the way I'm trading and I'm happy with it. Then I say you keep trading. And if you find that you're not following your rules, then you consider taking a step back. But simply just saying I'm not going to trade because I'm going to stop trading because I made X number of points, it's okay to do that in the beginning, but I think it's a little bit of a mistake. I'll talk about that here in just a few minutes. So big bar 46, outside down, almost outside down, not quite. Are traders going to buy it or sell it? Well, it's asking traders to sell further down, further away from the moving average. And that will limit some traders willing to sell here. Again, I think the sell-off 46 is more of a profit-taking sell-off than a sell-to-close sell-off. What I mean by that is, obviously there's traders selling closes, but they're going to be very quick to exit if we get a bull bar. And that increases the risk that we get a reversal up closer to the moving average. Bulls that are buying here, I think they're using very wide stops. And they're institutional bulls. They're trading very, very small. Just look at the sell-off. Breakout bar 44. And then disappointment bar 45. Big bar 46. What do you think 47 is going to look like? If I had to guess, 47 is going to be a disappointment bar. Always in bears. They're still short. And they probably have a stop, maybe 3 or 4 points above any bar. But if we get a bull bar, especially one closing on its high or on its above its midpoint, I think a lot of those always in bears will get out and wait for a couple of legs sideways to up. Traders selling here are momentum bears. They're not selling because it's at a valuable price. We're far from the average price, far from the moving average, and therefore this is expensive. Traders are selling because we keep getting bear bars in a micro channel. And because of that, if they're selling momentum and all of a sudden the momentum starts to dry up, they'll quickly start buying back shorts. We had a big sell-off down to 16 and then overlap 17, 18. Another leg down 19 and then more overlap 20, 21, 22, 23. And look what happened here. Another big sell-off, big bar 27, pause, and then when that pause bar happened, traders started buying back shorts. We have a leg down, pause, another leg down, pause, and now we're getting a third leg down. This is becoming climactic. Another bear bar, but a smaller body. We have 6 consecutive bear bars. That is strong selling by the bears, but it's fairly late in the sell-off. And that increases the risk that we get a reversal. And when I say reversal, a test of the moving average. The challenge for the bears is risk. Probability favors the bears, but how much risk are you willing to take? If you're selling right here, where are you going to put a stop? Are you going to put a stop above 42? If you're selling above 42, we're 23 points away from the 42 high. And what's the probability you're going to make 23 points before we pull back? And the reality is, I don't think the market is going to go down another 23 points without pulling back. Therefore, I don't think the probability justifies the bad risk reward. And so what traders will do is tighten their stops. They'll tighten it above big bear bars. They might put a stop above 46 or a couple of points above 47, betting that it's a sell to close market. In other words, they're lowering their probability of making money, but they're increasing the risk reward. I mean, just look at this. We have 6 consecutive bear bars. What's the probability we're going to get a 7th bar? And on top of that, if this bar closes on a tie, what's the probability that we're going to go above 47? Obviously, it's pretty high. It's probably great. It's probably 60% chance, at least, if not higher. What's the probability we're going to go above 46, the big bear bar from 2 bars ago? Well, the reality is we're probably going above that as well. And if everybody's selling because of the momentum going down, that means we could quickly reverse to the upside and get to the moving average if we get a bull bar closing on a tie. So always in bears, I would get out above this bar. We went a little bit beyond this bear flag. Yeah, it's pretty interesting. Daily chart. By the way, on higher time frames, I always go back and forth, but I generally like to look at Globex. Why do I like to look at Globex? Because I like looking at the market in the evenings. I think it's kind of fun. And I like seeing what the overnight hours did. 5-minute chart, a lot of times, depends on what I want to do that day. Sometimes I'll be really aggressive and trade the open. And whenever I do that, I'll often look at the Globex. So here's the Globex session. That is obviously not today. Globex session, with a lot of trading range price action, a little bit of a wedge bottom, 2 legs up, and anyways, I thought the odds were we would probably start to go sideways down. And you can see though, let me go back to the daily chart. The point I was going to make is you have a really impressive bar yesterday. But look at the bar. What do you notice? If we ignore the price and time axis and we just look at this chart, we have no idea. Let's just pretend it's a 5-minute chart. Do you really want to buy above yesterday's high? Of course not. The odds are it's going to pull back. Because this channel down is tight, it increases the risk of a second leg. Consecutive bear bars on the weekly chart, way to reversal up, and traders sold it. Bears trying to get the week to close on its low, but we'll see. It's pretty fascinating. Yesterday, rallied all the way back to the open of the month of July in the final day. So you have a doji 48. Does that look like the start? Do you really want to sell down here? Or do you think about 48 and think, you know, wow, the bulls were able to drive the market up a decent amount. In other words, they were able to make 46 and 47 have a lot of overlap with 48. And that increases the risk that we're going to pull back here. Sell the closed bears selling 46 and 47. What do you think they're doing with 48? I suspect a lot of those bears are going to be interested in buying back some of their shorts here and looking to sell higher. If not enough traders are willing to sell at this price level, 54.70, 54.72, that increases the chances that the market is going to have to pull back and find more sellers. Again, I keep talking about a pullback because I think the odds are we're going to evolve into a trading range. Always in bears, some traders it's still a bear trend, so it's still always in short. And some bulls, they would get out above 48. Some bears would get out above 48. But we only went 3 points above 48. In the range, let me just actually double check that. So we went 3 points above 48. And the range of 48, even though it doesn't look like a big bar, it's 4 points. So some traders might put a stop maybe 5 points or more above the high of the prior bar. But with the overlap, 48, 49, I suspect we're going to see more and more bears begin to buy back their shorts, leading to a rally that would go that'll go sideways to up at a minimum. If we start getting overlap here around 54.70, we'll probably rally and get a couple of legs sideways to up. And if the bulls are lucky, we'll get a big bull bar, another big bull bar, another big bull bar, and we'll get up to the moving average. This is the most recent major lower high, the 42 high. Bulls want to break above it and end the argument of a bear trend. Obviously, bears able to sell the close of 47, sell more higher, or simply sell more higher on 48 and make money. No sign of a bull bar yet, closing on its high. So you have theoretical bears still short. Inside bar on the prior bar, 49, low one short, but a low one late in the sell-off increases the possibility that we reverse back to the inside bar within the next few bars. 50 becoming a bigger bear bar, so a little bit more climactic. Are traders going to sell the close of 50, or does that increase the risk of a pullback? Well, every bar that gets added increases the risk of a pullback. Always in short. So the question here is, are bears going to continue to sell, or will bears look at this as a gift, an opportunity to take profits? The best looking bear bar of the sell-off from the 42 high. Climactic bar increased the risk that 50 is exhaustive. So let's see what 51 looks like. We're getting a vacuum down to yesterday's low on the Globex chart, 51.50, which we'd have to see, but you can see it right here, 51.50. So I suspect we're going to near support fairly soon. Obviously, very impressive selling. So I go back to my question I mentioned around bar 43, 44. We're at bar 51. There's exactly 30 bars left in the session. What is the probability that the market is going to be able to stay at 54.63 for the next 30 bars? The odds are it's probably going to have to pull back. And that's why I think we're probably going to have to rally for at least a couple of legs. If the bears are lucky, the rally will be fairly disappointing, lasting a couple of legs, maybe 15, 20 bars, and then we'll get a sell-off later in the day, causing the day to close on its low. Very good example of the dangers of picking wedge bottoms, though. So still always in short, bears have a stop above 50 at this point. If we get a bull bar 51, especially if it closes above its midpoint, I suspect you'll have more traders buying back shorts. So what caused today? It's a sell vacuum test of yesterday. The daily chart's in a trading range. And these big bars obviously are trend days on smaller time frames like 5 minutes. But here, we had a buy vacuum test of the July 23rd low, test of the July 19th low. And this bar was a big bar, but it's the first big bar after a decent sell-off. And it had a tail. And it was 2 legs up. So it's basically a second leg trap. And what did traders do? Traders sold it. One of the things to think about is this. Okay, so here is this rally. And if you look at the rally, the day ended, let's just go back to the daily chart for a minute. You can see we had a strong rally and a lot of sideways trading. That sideways trading created a topping pattern. You can call it a head and shoulders top. You can call it a consecutive bicline axis trend line break to a higher high, and then traders immediately sold it. But the point is, we had a really big bar, and it's a big bar in a trading range, and traders sold it. I suspect 51 is not going to be a strong reversal bar. It'll make traders decide, are they willing to sell more above 51, or are we going to pull back? And as you know, because I've been saying it for a while now, I think we're going to have to pull back and get to the moving average. So I am not interested in selling here. Now, what's the chances we get a very strong reversal up? Well, it's pretty low. That's the most recent lower high. It's not really a major. It's only 3 bars, but I suspect we're probably going to get there at a minimum. And then the market will decide if we're going to try and get up to the 42 high. Realistically, we'll probably get to the 48 high and the moving average at a minimum. Again, I would get out above any bar, especially 3 or 4 points above any bar at this point. We're probably going to the 48 high at a minimum. We only went maybe a point or 2 above the prior bar. And that is not enough for always in bears to exit. Plus, 51 is not a bull bar. What about selling below 52 if it's a bear bar closing on its low? Every bar that gets added increases the risk of profit taking. Increases the risk of profit taking. Therefore, selling below 52, the odds are we're probably going to go above the 52 high. Below 52, the odds are we're probably going to go above the 52 high. So always in short, yes, but consecutive sell climaxes increase the risk of a pullback. Another low one, but consecutive sell climaxes, probably buyers below it. If we get a bull bar 53, especially if it closes on its high, that'd be a second entry buy, and that would increase the chances that bears will begin to take profits above it. So just to be clear, I would get out above any bull bar if I'm a bear. And what about buying above 53? 53 is probably an okay buy, but you know it's easier if you can use a wide stop and scale in lower, and that's what makes it challenging for most traders. It's possible we have to form a micro wedge, 51, 53, which means we trigger the buy above 53, we fall below 53, and then we get another reversal up. And in general, I think it's better for most traders to focus on selling in strong bear trends and buying in strong bull trends. My general preference is once we've had consecutive sell climaxes, you know, I like to sell this. You know, 6, 7, or not only 6, but basically 8, 9, 10, 11, 12. I like selling this because the odds are you're going to go lower. And then eventually I stop selling and I start looking to buy for a test of the moving average. But more importantly, I like to look to sell the reversal down, such as selling above 33 or selling below 34, the wedge top, 30, 32, 34. And once you start to enter a channel, I become very resistant to selling far from the moving average. And the reason is this sell-off is fairly low probability. It's high probability that it's going lower, but usually that doesn't happen. And if enough traders begin to buy back their shorts, the reversal can be a little bit steep. Again, I'm not expecting a strong bull trend, but I am expecting a test of the moving average and probably a test of the 48 high. That's a strong enough bar that I'm not willing to sell above it. And I think it's reasonable, it's certainly reasonable for always in bears to be flat. That's strong enough reversal, 53, that we may get a couple of legs sideways to up. And the challenge is who's left to sell down here. If you're a bear, if you're an institutional bear, you know, Al always calls it strong bears. Those bears have been short all day. Are they going to look at this and say, you know, wow, what an amazing place to sell again? No. Those bears are buying back their shorts on the way down. In other words, they're offloading their position or unloading their position. They're buying back shorts as it's going down in pieces. And what are the bulls doing? Bulls are building a position. They're buying more lower, betting that the market's going to get a couple of legs sideways to up. Do you think the strong bulls are going to look at this and panic and buy back and sell out of their longs here? No. The strong bulls are more than happy to continue to buy because they're betting that we're going to get a couple of legs at least to the upside. And because of that, I think that limits the downside here. Common for the markets test 50% of the prior bar. The midpoint is 62.25, and the low of this bar, 62.75. Why the midpoint? Because 53. I said 62. 62.25 is the midpoint of 53. 53 is a big bar. And because of that, some traders would rather look to buy the midpoint of the bar rather than buying above the bar. Consecutive bull bars, strong enough reversal that we're probably going to get a couple of legs sideways to up at a minimum. We may try and get to 5,000. But so far, strong enough reversal, probably at least a second leg up. It's really easy to get upset when you see these big sell-offs. And you see a sell-off all the way down from the high of bar 4 to the low of the day. And you think, you know, wow, you know, that's incredible. And, you know, it's easy to get upset that you missed that, or you think to yourself, if I would have just sold anywhere, if I'd have sold below bar 7 and just stayed short for the rest of the day, I would have made a lot of money. And that's true. You would make a lot of money. But how many days do this? One of the important things to realize is breakouts. One thing I heard Al say many, many years ago in the trading room, and he still says it today, is breakouts are in essence buy and sell vacuums of support and resistance. And so when you see a sell-off on a 5-minute chart, as strong as the sell-off is, even if it's a small pullback trend, you know it's a sell vacuum testing something. When you see a strong rally, you know it's a buy vacuum testing something. What are we testing? Well, we reached the 48 high in the moving average, so of course there's going to be sellers. What about selling the 55? What about selling bar 55 that closes on its low? You'd be selling after consecutive bull bars, once after we've had consecutive sell climaxes. And I don't know how many bears are going to be all that thrilled. If a bear got out above 53, are they going to sell again 2 bars later below 55? I don't know if they will. And to me, that increases the risk that there might be more traders buying below 53 than selling it. some traders trying to buy a 50% pullback of the low of 53, high of 55. That midpoint would be right here. Bar 55 is getting a little bit big. It's forcing traders to sell around the midpoint of the past two bars, and that lowers the probability for the bears. It gives them a worse risk reward. Bears trying to get 55 to close on its low to entice traders to sell below it. Good bar for the bears, but close on its low, but possible 50% pullback from the past from the 2-bar breakout, and that lowers the probability of selling below 55. You can see bears sold the 48 high and the test of the moving average, but I suspect a lot of those bears are going to scalp out. So I'm not all that convinced that we're going to go far. We still may go below 53, but if we do, I suspect buyers below it. I'm not convinced that we're going to go a lot lower. You have some bulls buying in this area, betting on a 50% pullback from the rally up to the 53 high. So they buy, they put a stop below 53, betting that we get a second leg up above 55. Trading range, most likely for the bulls. And that's in part why we're pulling back here. However, because of the rally 53-54, I suspect the downside is limited, and that will reduce the number of traders selling, betting on a strong breakout below 53. You had some bears who sold below 52, or any of the closes, 51, 52, the low one below 52, and they sold more at the moving average. And those bears are deciding right here what to do. Are they sufficiently disappointed on the trade that they're happy to get out break even on the entire trade? Or are they going to try and get out break even at their original entry with a profit on their second? Or lastly, are they going to hold short, betting on a strong breakout below their original entry? 3 consecutive bull bars, good for the bears, but you're now at support. 1 second. But now you're at support, and you're testing the 52 low. The odds are we're probably going to start to go sideways after those 2 big bull bars, 52 and 53-54. The bears are hopeful they can get a downside breakout and a measured move. Good for the bears, but will there be more traders selling below 53 or buying below 53? I suspect probably profit taking below 53 and traders buying. It'd be better for the bulls if they made the market go sideways and they could get a second entry. This is one of the challenges of trading ranges. If you're a bull and you bought, let's say you bought the close at 54, which is really not ideal, but if you buy the close at 54 and you put a stop and 1 tick below 53, how are you feeling right now? You're obviously disappointed. And the challenge is whenever you're in a trading range and you see a big rally, it's really very difficult to buy this close from a math standpoint. And the reason is the stop does not necessarily go 1 tick below the bar. You can put it below that, but chances are we're probably going to go back up here. And so with some traders, what ends up happening is this. Traders use a wider stop and they wait for a clear downside breakout before they exit. And that makes that means traders have to trade really small. You're at the moving average at that point. And that also makes it difficult. But the reality is, if we get a second entry here, all the bears who sold, even the bears 52 and scaled in, were able to make money. So there's less of a need. There's greater risk that more and more bears will buy back shorts, leading to a trading range. Again, I'm not expecting a strong reversal. I'm really expecting a trading range. Plus, I go back to my logic. It's bar 58, and there's a little less than 24, maybe 24 bars left in the day. 24, 23 bars. What's the chances that this day closes on its low? I think it's going to be difficult for the bears to make this day close on its low. If we keep continuing to go down and building buying pressure, it'll increase the risk we get a reversal. So I do not think this day is going to close on its low. Now, if we rally, go sideways, and get a plunge in the final couple of bars, then we would. But overall, I suspect we're going to go sideways to up. And reality is, if you bought the bull close, 54, I suspect you'll probably make money if those traders use the wide stop and scale in. 59, a low one short for the bears, but a bull bar. And look what happened on the last low one, bar 52. Traders bought it. So what do you think is going to happen here with bar 59? It's a low one, it's a bull bar. I suspect buyers below, and we're going to start to go sideways. You can see not a lot of traders eager to establish new shorts below 59. Bears more interested in taking profits below 59, and bulls interested in buying. The sell-off to 59 was strong enough. The sell-off to 58, the 58 close, was strong enough for a second leg down. We had a trend line break, 59, and we got the second leg down on 60. But if 60 reverses up, it'll form a bull bar. And that may cause more bears to begin to buy back their shorts. Not a good bar to sell, so probably going to pull back here. What do the always-in bears do? I think it's okay to be flat here. While the bulls don't have a credible buy signal bar at the moment, the bears, they're trying to get a downside breakout, but after those two decent bull bars, 53, 54, I think we're probably going to go sideways in the range from the current price up to the high of 55. Some traders will keep a stop above the 60 high, or 3 or 4 points above the 60 high, betting on lower prices. Another bear bar, but a close above the 60 low, and 61 overlaps most of 60. 61 is overlapped by most of 60. So we're not getting strong follow through below the red line, the 53 low. That increases the risk that we're going to pull back. If we're not going to get a strong downside breakout, you'll have more and more bears begin to buy back shorts, and more bulls begin to scale into longs. And that would lead to a reversal up and a test of the 54 close. Bulls, they need decent buy signal bars. They went above the high of a bear bar on 59. That's good for the bulls, but they need to do more. It'd be good for the bulls if this current bar is a bull bar closing on its high. It'd be a second entry with 59 and a second failed breakout below the 53 low. But lots of bear bars, and that increases the risk that we may not go straight up. But always in bears, I think they probably get out above a bull bar, especially if one closes on its high. Other bears might wait for consecutive bull bars. Bears, they're trying to prevent the bulls from getting a bull bar. You can see the daily chart. Bears have done a very good job reversing yesterday's bar. You can see bears are not desperate to sell bear closes. They're selling small pullbacks. And that increases the chances that we're going to begin to go sideways over the next couple of bars. If the bulls are lucky, the bulls will get a strong bull bar closing on its high, ideally closing above the 53 low, the red line, and will test back up to the 54 close. If you're a bull and you buy the 54 close and you buy more above a bull bar, let's say 62, the current bar, if it closes on its high, what are the chances that you can get out, break even on the entire trade? It's probably pretty high. So you're a bull. Whenever you do something reasonable, usually the market will allow you out without a loss. So you buy the close of that bull bar, you buy more above, you scale in more above a bull bar, you buy the 54 close, you scale in more higher. The midpoint of your average entry would be around, let's just say 69 even. Same logic as you buy the close of 54 and you buy more below a bull bar, 53 low. You buy more at the 53 low, your midpoint is 65.5. So are the bears going to sell above 62 or buy back their shorts? If I'm a swing bear, if I'm an always in bear, I'm going to buy back my shorts above 62. Too much risk we're in a trading range and then we test all the way up to the 55 high. So I am not willing to sell above 62. The bears, they had a reasonable sell below 55, even though it was a big bar. And they got decent follow through down to 58. And it was strong enough for a second leg. Well, they got their second leg, 59, 60, and 61. The bulls have a chance here. It's a lower low major trend reversal, but realistically, 53, 54 is really not enough to make it a major trend reversal. It's enough to make the market a trading range, which means we could rally all the way to the 55 high and possibly go a little bit above it. But I don't think we're going to get a very strong reversal. In other words, I doubt we're going up to 50 to 5,000. I suspect we will over the next couple of days, but I do not think we're going to get a rally up to 5,000. It's possible, but unlikely. I do think we're going to get a tail on the low of this bar. Outside down bar, 63. But I suspect more profit taking below the bar than sellers. Bulls hope this is a wedge, 58, 60, and 63. But the bulls need to build the buying pressure and make the market go sideways. Obviously, strong selling today. You can see the 60-minute chart, a series of bull bars selling today. You can see the 60-minute chart, a series of bull bars. Hesitation below 60. So increase the risk that there might be more traders buying the 63. Hesitation below 63. Increase the risk there might be more traders buying below 63 rather than selling it. If this bar is a bull bar, especially closing above its midpoint, I think it's reasonable for bears to exit. One of the issues for the bears is its possible parabolic wedge, 58, 60, 64. Bears, they're hoping to continue the small pullback trend and get a measure move down from the 54 high to the 53 low. But we're getting a lot of bull bars, and that makes me think we're probably going to go sideways fairly soon. A doji, a lack of a decent bull bar closing on its high. But we keep alternating bull bars after every bear bar. And that increases the chances that the market's going to begin to go sideways. In other words, we may start to go sideways somewhere in here from 55.47 to 56.62 price level. The more overlap the sell-off gets from the 56 high, 55 high, the more likely it's going to pull back and get closer to the moving average. Let me back up. I still think it's possible that we'll probably get up to the 54 high. Bulls bought the close, bought more lower. I suspect they'll probably make money. There's still time in the day for the market to do that. But the bears are doing a good job preventing the bulls from getting a series of bull bars closing on their highs. So what do the bears do here? If they're short, where's their stop? I don't know how many traders are realistically going to put a stop above 55. That makes me think the stop is probably closer, maybe the high of 63. But if you put a stop at the high of 63, that is not that far away. And therefore, your risk is not all that big, which means the probability is probably a lot closer to neutral than in favor for the bears. That makes me think we're probably going to pull back here. So I suspect we're going to go above the 63 high. And if we start to get a series of bull bars, we'll probably get up to the 54 close. Consecutive bull bars, but one closing below its midpoint. So not the bulls. So a sign of weakness by the bulls. But the market is starting to go sideways. So the strong sell-off, 56, 57, 58, is transitioning into a tight trading range. And if the bulls can make the market go sideways and stop the selling, they can get a chance at a reversal up. Reversal up somewhere around here, 54.75 area. Whenever you're confused, there's nothing wrong with being flat. These days, as exciting as they look, they're pretty rare. Really, when's the last time you've seen a really large bear trend day, and then a really large bull trend day followed by a really large bear trend day? They're not that common. And I think most traders, the most important thing to learn is it's going to take a lot of trading range price action to actually get a reversal in a trend, which means all the reversal ups are minor. Other than that, it's important to learn whenever you see a strong sell-off, 8, 9, 10, 11, 12, just sell something at the market and hold for a couple of legs. And then if you keep seeing this and you keep missing trades, who cares? Just wait for the next day. Wait for clarity. Lack of trading is typically not the reason traders are not profitable. It's usually due to overtrading, too many dumb trades. You've heard Al say it many times, and it's really true. Most traders take enough winning trades to do well. However, they have too many bad trades, and bad trades are just the really bad risk-reward trades. Buying the close of 12 and just scaling all the way in lower, that's an example. Or yesterday, selling and scaling in higher, that's an example. For me, when the market is clearly in a trend, I really like to limit buying. So if it's clearly in a bear trend, I like to look to sell pullbacks to the moving average. And if I'm buying, pretty far from the moving average, and I'm pretty quick to get out. Other than that, I really like to focus. If it's a major reversal, I really want to trade in that direction. I think about always in. I talk a lot about always in trading, and I like to divide it into two categories, major and minor. When you're in a major trend, the only thing I want to think about is trading in that direction of the trend. However, when you're in a trading range, trading ranges are filled with minor reversals, and therefore I want to count legs when the market's in minor reversals. I don't want to trade the third leg at a wedge bottom in a trading range. I don't want to sell it. Just like I don't want to buy a wedge top at the top of a trading range. One of the easiest ways to view trends to see if the market is trending or not is look at the moving average. If the majority of the bars are below or above the moving average, you know you're in a trend. So if you look at the market, you look at a chart and you see this many bars below the moving average, you know you're in a really strong bear trend. If you see this many bars below the moving average, you know you're in a strong bear trend. And until we start getting closes above the moving average, the odds are we're going to continue to go sideways to down. But here, I think we're getting too much buying pressure, and that makes me think we're probably going to go sideways to up and travel somewhere around maybe the close of 54 or the midpoint of the most recent major lower high. So the bulls, they want to break above the 55 high, the most recent major lower high. 48 is really not all that major. You know, I said this is a major lower high. The only problem with that is the actual pivot high of this move is barely, it's just one bar, in other words. And therefore, you could argue the most recent major lower high at bar 50 or 51 is all the way up here at 42. The most recent major lower high down here is all the way up at bar 55. So we may have to go sideways here, but if we start getting enough bull bars, I think the risk is real that we get up to the 55 high. More traders buying below 67 than selling it. We're starting to get bull bars and lack of bear bars closing below their midpoints. That increases the probability that we may try and reverse up and test the high of 55. But the bulls have yet to get strong bull bars. They've stopped the selling by making the market go sideways, but they really need to do more. I still think the market's going to have a hard time closing on its low. We've had so much selling today, and we just look at a 15-minute. Let's look at the higher time frames. So here is a 15-minute chart of the Globex session. Very strong breakout, and then bull bar, sell off, another bull bar, sell off. That is climactic, and we're really far from the moving average. That makes me think we're probably going to pull back. Plus, as strong as today is, it's a bad sell below yesterday's bar. Yesterday's bar is a bull bar, and there's probably more traders buying below yesterday's low than selling it. That's obviously talking about the Globex chart. If we look at the ES.D, obviously there's not. Yesterday's low is all the way up here, but this is a really big bar. The range of this bar is about 160 something points. So obviously it's pretty big. It's not quite 160 points, but the range, it's a big bar nonetheless. Always in bears. I'd probably get out at this point. Too much risk that we get a couple of legs sideways to up. You'll have some bears selling at the moving average, but chances are we're probably going to get a few closes above it. So I think it's probably better to wait. If everyone decides that we're in a trading range from the high of, basically the high of 55, we can get a buy vacuum to the 55 high really quick. So I wouldn't be surprised at all if we get up to the 55 high in a matter of a few bars. So let's see what this bar looks like. 60-minute chart, that's looking bear bar in a micro channel, so probably going to get disappointment this hour. Tail on 69, but a bad sell below 69. Increase the probability that there might be more buyers below than rather than sellers, forcing traders to buy at the bottom of what could be a tight trading range, or the bottom of a trading range. Someone asked if I was long. I'm not long. However, it's my nature. I like trading ranges. I like selling. I'm much more aggressive selling during here. so selling aggressively as the market's going down. However, the further the market goes down, the more interested I become in selling pullbacks, like selling below 34. And then through here, I'm really not interested in selling because the higher probability outcome is a test of the moving average. And then by the time you get these big bull bars, the problem I have with selling, it's not that selling is necessarily bad. The problem I have with it is this. You're more likely, once you've had consecutive sell climaxes and two big bars, you're likely to get contained in this range. So the further down you go, the risk reward becomes worse and worse. And my overall concern here is that we're going to get up to these bars, the 53 and 54 close. It sounds crazy. You buy the 54 close and you put a stop, a measured move down. That sounds almost absurd, but the reality is traders will do that. They'll use a wide stop and buy more lower. And that increases the probability that we're going to evolve into a trading range. For me, I generally like more trading range days than small pullback trend days because it's against my nature to sell the close and just hold the rest of the day. Right now, what's my expectation? I think there's a real chance that we're trying to form a bottom and we're going to rally up to the 54 close. And that is why I'm not so interested in selling. I thought it was okay to sell 57, but even selling 57, you're selling, the problem is risk reward. If I sell the 57 close, I didn't even make 1 times my risk. One of the things I'll often do is once you've had consecutive sell climaxes, here, here, and here, you get a big bar like 27 and sideways and you're at support, 5,500, I'll often buy a small position for a test of the moving average, and then I'm pretty quick to scalp out. But more importantly, I'm looking to sell once you've, some sort of stop entry. And in this case, we had a wedge, 36, 32, 34. I never get upset about missing moves. I just don't care. What I care about is taking good trades. And if I make 20 points and the market made 200 points on the day, I don't care. I did what I thought was reasonable. And that's the most important thing with trading. It's always very tempting. You see these kind of days where the range is huge and you think to yourself, oh my gosh, if I'd have just stayed short, I would make a ton of money. And you're right, you would make a ton of money. One thing I heard, it's actually Ali that said it, but he made an interesting point, and Al said it in his own way as well. And what he said is, it's easy to look at a small pullback trend day, and especially when you're starting out, you haven't been trading that long, it's easy to look at a small pullback trend day and think to yourself, if I just sell the close at bar 7 and just hold short for the rest of the day, I would make a crazy amount of money. But the reality is, just look at a lot of days. So let's just see, how many times can you do that? Let's say you sell bar 9, sell bar 10, bottom of a trading range, go sideways for many bars. Downside breakout, and then you get a reversal. You sell when it's clearly always in short, 11, 12, but 50% pullback, you get a small second leg, and then you get a reversal up. So most days don't clearly go one way. So what's going on right here? Well, the problem for the bulls is the possible wedge. Rally, pause, second leg up, pause, and then a third leg up on 71. But we haven't had a bear bar closing below its midpoint since 64. So that damages the probability of selling below 71. You can take the sell for a swing, but bulls made money buying the 53 low. So if you're a bull and you bought below 53, you made money. And that lowers the probability for the bears. When bulls start making money below bars, it increases the probability that you're in a trading range. So whenever I'm suggesting a pullback, I'm suggesting a pullback to the moving average. So all through here, I was expecting a pullback to the moving average, which we got on 54 and 55. I did not think we would go this far below 53 and 54, but my one thought was there was buyers below the 53 low. And in situations like that, it can be painful because they have to use a wide stop and scale in. But the reality is bulls made money buying below 53 and 54. But once I see bars like 53 and 54, I become hesitant to sell. The sells are early. And in general, I really don't want to sell after 3 or 4 bars down because the upside's limited. You know, it's okay to sell above a bar like 58 for a second leg down. But once you start to get below the 53 low, you're entering a buy zone, and that's an area where bulls will begin to buy and scale in. So I hope that makes sense. Always in bears, what do? Well, if you're a bear, let's say you're short right now. The challenge with being short here is where are you going to put a stop? So if I'm a bear, and let's say I'm short, and I put a stop above the 55 high right here, okay? What's the probability that we go all the way down here to 54.41 before we go up to the 55 high? I don't think it's 60%, and therefore that's bad. That's lower. It's low probability with bad risk reward. Whenever you have low probability and bad risk reward, that's a bad trader's equation, and that's why traders are not willing to sell here. It was sensible to sell the 54 close. Why was it sensible? Even though it's big bull bars, because the reality is this right here. If you sell the 54 close, the odds are we're not going a measured move up, and that means the odds are, I'm not explaining that as well as I'd like. What I'm trying to say is this. If you buy the 54 close, stop below 53, it's bad risk reward. And traders will be really quick to sell out of longs. Therefore, if you sell the close of 54, the odds are the upside's probably limited. So if the trade is going to work, it's probably not going to go all the way up to 54.90. Maybe it goes up to 54.85 at most. So what a trader can do is they can sell the close of 54, put a stop maybe a little more than 10 points, maybe 15 points higher, and set a target at twice the risk. And they would have a trader's equation with a 2-to-1 risk reward and okay probability. So you see the issue? This is what I was talking about. We're accumulating bull bars. So if you're a bull, you bought above close at 54, and you buy more above a bull bar, the 62 high, that is break even for the bulls. Basically 60, somewhere around 66.75. So let's just call it 67 even. The channel up is getting tight, and that increased the risk. We're going to get up to the close of 54 and possibly the high of 55. If we get up to the 55 high, which is basically 54.80, that would paint a tail on the bar. So I would be able to short at this point. And I want to explain my logic a little bit differently through here. One of the reasons why I'm hesitant to sell basically bar 44 all the way to the low of the day is because I thought that the odds were price would return to those price levels at some point fairly soon. And therefore, I'm not that, it's too difficult. It's difficult to structure the math. And I'd rather look for the market to try and reverse. As far as selling 72, I'd be more interested had we not had strong bars 53 and 54. I know it sounds ridiculous, but the bulls who buy the 54 close and scale in are probably going to make money. Or worst case, they'll probably at least avoid a loss. I'm going to turn the screen off. I want to show an encyclopedia slide. Trader's not desperate to buy. We're testing into the buy zone. Some bulls bought the 56 low. and the 56 low is 67 even, and the high of this bar, 67.5. Bears trying to get a reversal bar and a bear bar closing on its low at the moving average. It'd be a 20 gap bar sell. But following a lot of bull bars, I think that makes bears unwilling to sell below bars. This is basically what I'm talking about. Buy the close rally, deep pullback, 80% chance you can break even on the entire trade, which is pretty much where we are at this price level. So let me just back up, and if you buy the close at 54, and then you buy more above a bull bar, 62, 80% chance you can avoid a loss. There's a 60% chance you're probably going to make money. And that is this whole point. It's kind of, I mean, obviously, the higher probability events are things like this. I mean, obviously, this has a higher probability outcome. When you have a buy the close rally in a bull trend, the odds are much higher that you can buy, scale in, and make money, even if it takes several hours. But this is the issue. You know, whenever I start seeing big bull bars, especially in a climactic sell-off, I'm just become a lot less interested in betting on continued prices. The other challenge is this. Al showed it earlier. Let's find. I'm looking for gap down, trend from the open. Whenever you get a small pullback trend day, 20% of the time, it remains a small pullback trend for the rest of the day. And then 20% of the time, you get an opposite move. So you get a start of a small pullback sell-off and then a sharp rally. 60% of the time, you form a trading range. Now, who thinks, if we think about that, you know, ask yourself, write this in Discord. Why am I expecting a tail on the daily chart? In other words, why am I expecting today not to close on its low when we've had such a strong bear trend? Who thinks they can answer that? We've been in a very bearish bear trend. Why am I not thinking it's going to close on its low? Now, to answer that question, I'm going to ask you another question. How many bars do not have wicks? How many bars close on their extreme, in other words? You know, it's not 1 or 2%, but yeah, I mean, it's very few. And whenever you have really strong bars, it actually increases the chances of buyers. So look where you are. I'm going to turn the screen off for a minute. I want to pull up a chart. Okay. What do you think is most likely after this bar? Who can answer? What's the market cycle in this chart? Yeah, it's a trading range. And so the issue is this right here. Whenever you get these big bars, the problem with it is it's forcing traders to sell fairly low in the range. Just like yesterday forced traders to buy high in the range, this is forcing traders to buy low in the range. And as this sell-off gets more and more extreme, there's less traders willing to sell it. Now, 73, not a great bar for the bulls. It's a weak stop entry short. It's a weak stop entry bar for the bears to sell. So it increases the probability we're going to go sideways. I still think we'll probably go at least a little bit higher, but obviously it's disappointing. You're in the upper third of the most recent leg. You'll have some bears selling on the way up, selling at 54.70, putting a stop above 55. those bears are trying to keep the market forming lower highs and lower lows. In other words, they want to prevent the market from going above 55. But, just ask yourself, is this a bear trend or a trading range at this point? We're probably in a trading range. And that makes me think we're probably going to get up to the 54 close. Small pullback trends do not allow large bars like 53 and 54 to form. Whenever I see those bars, I think the next reversal down is probably going to be a leg in a trading range. And that's why I went all that bearish. Here, after 39.40, this area, my expectation was a trading range and tested the moving average. And once we saw big bear bars, I thought consecutive sell climaxes will probably test the moving average at some point. I didn't think we'd go this far down before we touched it. This is strong enough that I thought that it would at least make the market a trading range. Probably always in long, strong enough breakout, we may get a second leg, but overlapping bars. For the bulls, I'd probably trail, if I was long, I'd trail a stop below, which I have been long. I would trail a stop below, maybe below a couple of points below a bar. But the odds are we're going to go sideways in here. So my minimum target, tested the 54 close and the 54 high, which I suspect will probably reach both. But risk reward getting worse for the bulls and increase the probability we'll probably go sideways. Bear bar 75, but tight bull rally up to the 74 high. Increase the probability of traders buying the close of 75 and the market getting a second leg. We're so close to the 54 close and the 55 high that I think we'll probably get there. You can see on the 15-minute chart, 75 is a bad stop entry for the bears. 4-bar micro channel, probably buyers below in a second leg. But disappointment. The odds are if we break above 54, or if we break above 55, we're going to be in a trading range. So I don't think we're going all the way up to the 42 high. My expectation is a test back up to above the 55 high and sideways. Bulls are trying hard to get follow through. 5,500 is so close that it's possible we get there. But the question is time. This is already bar 77, and that lowers the probability for the bulls. You can see traders taking profits, so it looks like we're going to continue to go sideways. Not a good stop entry sell, 77, but a really big overlapping bar. Increase the odds that we start to go sideways. Bulls, they're still trying to get up to the 5,500, but that's pretty far to get there in the next 4 bars. So I doubt we're going to get there. It's always interesting to me. 5,500 seems really far away, but it wouldn't even take a measured move up of the prior bar would get you to 5,500. Probably too far for the rest of the day, but these bars are big. I mean, the range of this bar is 20 points. So in terms of the day's range, 5,500 is not that far away. The big issue here is the fact that it's bar 78, and therefore it's a little bit dangerous to be betting on a test of 5,500. But I wouldn't be surprised at all if we get there. If the market agrees that 5,500 is going to get tested, it wouldn't take all that much. But we're getting so much overlap that makes me question if we will get there before the close. I do think we're going to get there over the sometime in the next 24 hours. It was reasonable to buy 5,500 on the way down and scale in lower. Bulls, it was reasonable to buy 5,500 as this bar was going down and scaling lower. And that makes me think they'll probably be allowed out of their trade. We tested 5,500 here. We went below 5,500 on bar 27 and then above it, but we didn't go that far above it. And that means the bulls buying 5,500 and buying more lower, 50 points lower, 5,450, the market should get back to the original entry. Just like the bulls here, buying 54, the close of 54, scaling in, they should make money. I may have misspoke, but the bulls buying 5,500 as the market on 27 as the market was going down. If they scaled in lower on the daily, and this is the daily chart perspective, if they scaled in lower and bought more, 50 points lower, they should make money. Give me just a few minutes and I will start the end of day review and answer questions. Thanks everybody for being patient. Really interesting day overall. We completely undid the selling from yesterday. So certainly good for the bears. Daily chart. Tight bull channel. We have a trend line break and we came really close to 5,400. We're about 30 points away. And we bounced. We had a two-legged pullback. Yesterday formed a possible second leg trap. And then obviously yesterday was a big bar, big risk. I thought we'd get at least a small second leg up, and instead we completely reversed down. Strong enough bar that we may get a second leg down, so that may have trapped the bulls. My concern for the bears is bottom of a trading range. So if you're selling the bears on the daily chart, if they're selling below today's low, they're selling low in the bottom of a tight trading range. And generally, that's a low probability bet. So I suspect probably disappointment below today's low. 5-minute chart. We had a tight trading range going into yesterday, and today gapped up and formed a doji with bar 2. Bar 1, bull bar closing on its high. Bar 2 was a doji. And that increased the probability that we get a small second leg up, which was bar 3. But the problem with bar 3 is it's a possible failed breakout of yesterday's highs. Plus, the daily chart, the odds were there would be sellers above yesterday's high, and we would go mostly sideways. So I thought sellers above the red line, which was yesterday's high. I'm going to make it blue. 5 consecutive bear bars, bad high 1, probably sellers above. And then 6, we formed a doji. It's a doji bar, and you can see it's an inside bar. Possible inside bars or triangles increase the probability. Sellers above and another leg down. And then you can see 7 broke below 6. Good for the bears. Looks like we're undoing the rally from the 3 high. And we're breaking back into yesterday's range. We may end up trying to go outside down and falling below. Well, outside down would be down here. But we may end up going below the low of yesterday, which is right around here, 55.30. Consecutive bear bars, 7 and 8, always in short, probably going at least a little bit lower. And then 9. It's a doji, but after the micro channel from 4, I suspect sellers on the close and traders selling higher. 10, good bar for the bears, probably going at least a little bit lower. 11, consecutive bars. We're getting tails below bars 10 and 11, so we may pull back soon, but it's a strong enough breakout that traders will sell and scale in higher. 12, good bar closing on its low. 60-minute chart, it'll be a bear bar. And you can see there's the 60-minute bar closing on its low. 13, doji, probably sellers above. 14, a bear bar closing at its midpoint. Starting to find hesitation, so we may have to go sideways for a couple of bars, but we're so close to the prior day's low, which is right down here, around 55.30. that I suspect we're probably going to get there. 15 consecutive bear bars, good for the bears, but getting climactic. And then 16, another big bar, a little bit climactic, so you may see some profit taking. However, you can argue parabolic wedge 11, 13, 16, but the reality is parabolic wedges are minor reversals, and that increases the probability we're going to go sideways. 17, inside bar, probably sellers above scaling and higher. And 18, we couldn't trigger the sell, and we formed an inside bar with 18. So now we have consecutive inside bars. Possible final flag, but whenever you get a tight bear channel, such as what we have here, in basically the form of a micro channel, it's a micro channel from the 4 high to the 18 high. So it's actually a 14 bar micro channel. That increases the probability that the market's going lower. 19, breakout below 18, good for the bears, but probably going to pull back soon. And then 20, we formed a doji. For the bulls, it's hesitation, increasing the risk of a pullback, but the channel down is so strong that it's a breakout on a higher time frame, and therefore probably sellers above. 21, inside bar, probably buyers below, and you can see it looks like we may have triggered the buy by a tick or two and then reversed up, but I suspect traders selling the close of 22 for a second leg down. 23, bear bar, good for the bears, probably going at least bear bar, so traders sold the close of 22. And then 24, another bear bar. Looks like we're going to continue to go lower, but I suspect a lot of traders would rather sell closer to the moving average at this point. 25, another bear bar, 3 consecutive bear bars. But in the area, we're getting a lot of overlap, and that increases the probability of sideways trading. 26, bear bar closing on its low. 27, another big bar. We're right at the 5,500 round number, so probably going to go mostly sideways. 28, doji, a warning that the bears are not as aggressive as they could be. And then 29, bull bar, 30, bear bar. And you can see traders selling above. Bears sold the close of 27, sold above 28, scaling in higher. But what are they doing on the retest? Looks like they're getting out below bars. What about selling below 30? 30 is the low one short after consecutive sell climaxes. And we've been away from the moving average for a lot of bars. That increases the probability that we're going to get closer to the moving average. 31, outside up, good for the bulls. Probably going to go at least a little bit higher and test closer to the moving average. 32 consecutive bull bars. Then we got an inside bar, 33. If we break above 33 or the 34 high, it'll form a wedge with 30, 32. Sorry about that. I saw I had to deal with something on my other computer. We have a wedge, 30, 32, and then if we break above 33, it'll be a wedge. So 2 pushes up, 1, 2, and then 3. 34, we triggered the sell above 32 and reversed down. Good for the bears. We'll probably go at least a little bit lower. Strong bear breakout, 35. Big enough bar, but forcing traders to sell at the bottom of the range that I suspect the market is probably going to go at least a little bit lower. Give me just 2 seconds. Good for the bears, but may have to pull back. And then we got a bull bar, 36, but I suspect sellers above. 37, second leg down at 35, but probably going to go at least a little bit lower. 38, good for the bears, consecutive bear bars. However, probably going to start to go sideways. Doji, 39, but bears, they're getting a micro channel, and that increases the risk that the first reversal up will be minor. 40, bull bar, but not all that strong, probably sellers above, but also probably buyers below 40. And you can see 41, we found buyers below the 40 low and reversed up, but a bad second entry. It's a doji, so there might be more sellers above it. $42, we triggered the buy above 41 and reversed down. Second entry short, tight bear channel, but I suspect buyers below and sideways. And then 43, we broke below 42, tried to reverse up, but probably sellers above. 44, downside breakout, good for the bears, but getting a lot of overlap. That makes me think we're probably going to touch the moving average fairly soon. Follow through 45, consecutive bull bars. Probably going to go at least a little bit lower, but this is selling momentum, and because of that, that increases the risk that we get a reversal up at any moment. 46, bear bar closing on its low, good for the bears, but I suspect traders are going to be disappointed down here. If we get a bull bar, especially when closing on its high, reasonable for traders to get out, and then another small bear bar, increase the risk that we may pull back. Then we got a doji 48, but tight bear channel 42 to 47, probably more sellers above and at least another leg down. Bear bar 49, inside bar, but a bad low one. If we do get a breakout below 49, I suspect we'll have to test back to it over the next couple of bars. Good bar for the bears, 50, but I suspect buyers below. And 51, a bear bar. Consecutive sell climaxes, probably going to reverse up to the 48 high. And then we triggered the buy above 51 and reverse down, but a bad low one. Probably traders buying below 52, scaling in lower. But low ones typically lead to pullbacks and trend resumptions, especially later in channels. The channel down is so strong that I suspect sellers above and will probably retest the lows. 53, outside up, good for the bulls. Probably going at least a little bit higher, but then 54, a big bull bar, probably a small second leg up. However, the channel down is tight enough that we may end up just going sideways here. 55, bear bar closing on its low, probably buyers below scaling in lower, but strong bar closing on its low. Strong bar closing on its low, reasonable for always in bulls who bought above 53 to get out below 55. Follow through 56, more follow through 57. More follow through 57, probably sell to close and going lower. But because of the bull bars, 53, 54, I suspect buyers below. Certainly below the 53 low. 4 consecutive bear bars, 58, probably sellers above 58, second leg down. And then with bull bar 59, I suspect buyers below the 59 low. But because of the micro channel, we'll probably get at least a small second leg down. 60, breaking below 59, the bad low one, probably buyers below, scaling in lower. 61 consecutive bear bars. The problem I have here is that the market is probably going to start to go sideways in this range. 63, outside down. Good for the bear, good for the bulls. Outside down, we triggered the buy above 62 and then reverse down 63. Probably buyers below. But a big outside bar. It's an expanding triangle on a higher time frame, so I suspect the market is going to go mostly sideways. 64, bear bar. Not ideal for the bears. Looks like we're going to start entering a tight trading range, and that's what we did over the next several bars. 66, 67, consecutive bull bars. And we got a doji, 68. So the bulls are successfully stopping the selling pressure. And then 69, we broke above 68, 67, but we ended up pulling back. But it's a bad stop entry below 69. Makes me think we're probably going to test up to the 54 close. And then we got a bull bar 70. Breakout pullback buy. I suspect we may pull back for a bar or two, but we're probably going to go up a little bit higher and get up to the 54 close. Doji 56. 70, breakout pullback buy, high one. I suspect we may pull back for a bar or two, but we're probably going to get resumption and go up to the 54 close. 72, another bull bar, probably going at least a little bit higher. And then 73, broke to the upside, but pulled back. Bad stop entry sell below 73, but 73 is a doji, increased the risk through sellers above. Big bull bar 74, good for the bulls. However, close enough to the target. I suspect we're going to go above the 54 high and the 55 high. In other words, I suspect we'll get to the 54 close and the 55 high. And then we got a big bear bar 75, probably buyers below it, and then 76, another push up. But of course, buying the close of 76, really not all that ideal. Too late in the day, probably going to go sideways. And you can see we just went sideways into the close. Always in, it's basically always in short for the entire day. Maybe always in long above 1, but top of the trading range, not ideal. Then always in short, 7, 8, 9, somewhere in there. Bears, where do they get out? Some get out above 31. I don't think they have to. If they get out above 31, they sell again below 34. Bulls, they get out below 34 if they're long. And then where do they get out here? Technically, they get out above a bull bar or a couple of points above any bar. And arguably, that was here, 53. You could get out above 39, but the market only went a couple of points above it at best. And we didn't trigger any bull bars closing above their midpoints. So that was a sign of strong buying, strong selling for the bears. Bulls, if they buy above 53, they probably get out below 55. Bears, some sell below 55. Others may wait for 57 or sell above a bar like 58. And then I'd get out of shorts above 62 for sure. And then I think it's really tough to sell again. And then the bulls, where do the bulls buy? Maybe they buy 70 or 71. Or some buy earlier, but not clearly always in long. And then if you buy 70, 71, it gets really disappointing in here. And they probably just get out somewhere a little bit better than break even or near the high of 55. Limit orders, lots of limit orders. Here, more sell to close. There's not really any limit order sells above. I thought sellers above 21. I thought buyers below 30. I thought sellers above 33. I thought sellers above 42. And, technically sellers above 47, but really tough to do when the odds are you're going to get to the moving average. And I thought buyers below 52, but sellers at the moving average. But after 53 and 54, I think most traders would rather look to buy a pullback at that point. I thought buyers below 59, buyers below 62. Buyers below 67, and even buyers on the close of 75, but pretty aggressive. Buy the close, sell the close. It's basically sell the close from bar 8 all the way down. You can pretty much sell anything especially if you're willing to use the wide stop and scale in. And then maybe sell the close 45, 46, 47, but fairly tough to do. And then 54 is it buy the close. It's really tough. It's in general, buying the close of a bull bar at the moving average is not really ideal. And that's probably it for buy the close, sell the close. Maybe buy the close 71, 72, but really, I think fairly tough to do. Let me take a look at questions. Okay, question. Brad in January. Question, when is the pilot coaching session on YouTube going to resume? Hopefully very soon, within August is my hope, but stay tuned to that. Question, 5 years in a row losing money. Should I stop trading? Well, I don't know. I'm sure if you ask that to a lot of business owners who are starting businesses, then, if you ask that to Elon with Tesla, we would not have Tesla at this point, regardless of people's viewpoint of Elon. The reality is when someone is losing money, there's usually a select few things they're doing. And, this gets into, aside from the fact that, one, you have to watch the videos and study. That's just kind of a given. But let's talk about the other things. Most people, what they do, they end up risking too much. So their trades have bad risk reward to them. They end up risking too much. That's one issue. They end up buying high and selling low in a trading range. And the other thing they do is they end up fading strong trends. So if we look at this, what's one thing they do? They just start buying all the way down rather than looking at this being always in short and only looking to sell. Here, they end up buying all the way down. And then they get squeezed out here only to watch the market pull back. Or, they buy 54 hoping that it's the start of a trend only to realize it's a trading range and they get stopped out below the 53 low. And there's many other things. For me, I've been doing this for over a decade at this point, 10 years, 11 years. I started studying Al pretty much 2012, 2013. And, I was fascinated by it. And there's so many things you can learn when you're studying and learning how to trade. But the one thing I had to remind myself was I'm a human, and I may not be the smartest person in the world, but if I become fascinated by the subject, I'll figure it out. If that's 5 years, if that's 10 years, if it's 20 years, at some point I can figure it out. And that's the mentality you have to have. There's a podcast with Al and Richard on the Day Trading Insights video, on the Day Trading Insights website, which is the 6-hour edition of the Brooks Trading course. And one of the questions Richard asked Al was, Al, what's the most important characteristic of a trader? And the one thing Al said was he thinks the most important characteristic is persistence. And I really agree with that, because in order to be persistent, the reality is you have a bad day. What do? Let's say I bought several times saying I lost money. Okay. Well, there's something I can do with this chart to learn something. And so the way I view trading is this. I'm going to make thousands and thousands and thousands of mistakes in my career as a trader. And your career as a trader starts on day one, the first day you start trading. And every one of those mistakes has a learning opportunity. And if I can correct enough of those if I can correct enough of those mistakes, I'll be profitable. And then if I can correct even more mistakes, I'll be even more profitable. So I look at it like this. Whenever I feel lost, one thing I like to do is use something like TradeZilla, which captures your trades. It's basically a trading journal. Or do it the old-fashioned way. Get an Excel spreadsheet and log every trade you've taken over the past week. And the next thing I would do is sort them. Sort from highest to lowest. And what you can do is take a look. What are your biggest losing trades? Do you have a trade where it's 10 times larger than all your other losses? If you do, take a look at that. What are the reasons? What are the commonalities? Maybe you're risking too much. And, you have to play detective. But the reality is, nobody is going to do it for you. So, it's easy to get upset with trading. It's easy to say, should I just quit? Should I just quit? Maybe this isn't for me. And the reality is, what I would say is trading is really difficult. And nobody's going to just give you money. No one's going to give you a secret way to trade. Trading's hard. Otherwise, everybody would do it. But you can totally figure it out. But you have to be willing to put in the time. I call it aggressive patience. I didn't make up the term, but I heard someone mention the term, and that basically what it is you have to be aggressive in your studies. You got to always be thinking about the market and learning and constantly thinking through, what can I learn more about the charts, watching the videos, learning Al's terminology, reading the books, all that stuff. But then you also have to be patient enough. You got to let time do its thing. So whenever someone asks me, how can I be more profitable? There's two avenues, other than the obvious one of studying. And that is, you got to look at yourself as, what type of trader are you going to be? Are you going to be a trader who is completely flexible in the rules, a purely discretionary trader, one that just basically, you're going to trade the chart in front of you? Or are you going to think more in terms of I'm going to design one method to trade, one way to trade? And the reality is, if you think about it like this, I'm going to trade second entries at the moving average. So I'm going to trade a low 2 at the moving average when the market has been below the moving average for 20 bars. That's probably a high probability trade. However, I'm not going to find that many trades. If I I'm only going to trade, let's say wedge pullbacks to the moving average when the market's been below the moving average for 20 bars. Okay. I'm going to get one trade, maybe once every few days. That is a very reliable way to trade. In other words, it's basically, I'm kind of stealing this from Ali Afshari, but it's basically building a factory. I'm going to build a factory. That's me. That's my trading ability. And I'm going to build one product, one method of trading. So I'm going to trade wedge bear flags at the moving average and trends. Then I'm going to start trading breakouts and second legs. Then I'm going to start trading this, and then I'm going to start trading that. The whole point is a factory doesn't say, okay, I'm going to build one thing. I'm going to, here's all the things I want to do. They take one thing at a time. So my advice to you would be figure out what you really like to trade in terms of setups and really master that one setup. Once you understand that setup really well and you've been very consistent with that setup, think about another setup. So think about a major trend reversal. Maybe there's a way to trade major trend reversals. But the biggest thing is make slides. Minor reversals, must count legs. Think through all the things you're learning and make some slides over it. So here's a strong rally. I believe this is the euro dollar. We had a strong rally on the 15-minute chart. Well, here's a 60-minute chart of this rally. Executive sell climax. It's a wedge bottom at support. So there's many things you can do, but the main thing is don't give up. And I know it's frustrating. My suspicion is if you had a bad day today, it's probably because you were buying as the market's going down. So one idea would be just trade always in. If the market's always in short, only sell or look to sell pullbacks. If it's always in long, only buy or look to buy pullbacks. Looking through more questions here. When's the link for when's the August webinar, GoToWebinar link going to be posted? Or when is the sign up going to be posted? I would check back later today. I've heard it takes around 10 years to become a profitable trader. It can. It varies on the person. Like I said a few minutes ago, the trader who's going to trade like Al and trade if you're going to take basically everything in the Brooks trading course and trade it all at once, I think it's going to take you a very, very long time to be a profitable trader. However, there's a caveat to that. If you learn everything about the Brooks trading course and you apply little pieces of the Brooks trading course to be profitable, I think you'll be profitable much, much faster. In other words, trade breakouts and second legs that are leg one. And Al has tons of information about breakouts and second legs in his books and his video course. Really understand that. Then, think about it like a decision tree. If the market's in a trend, is it a breakout or a channel? If it's a channel, is it tight or is it broad? If the channel's tight, I only want to trade in that direction of the channel. So think in terms of things like that. Which setup do you think a beginner should focus on to start with? I think beginners should focus on understanding two things, breakouts and second legs, and major trend reversals. Why should a trader understand breakouts and second legs? The reason is, in order to be a profitable trader, we have to understand leg counting. And if we don't understand breakouts, we'll never understand how to count legs. On your market review, how do you know if there are buyers or sellers above or below a bar? It has to do with context. How much capital should I risk on every trade, and what in terms of percentage? Well, that very much depends on the way you're trading. So the higher the there's two ways I think about a trading method, and that is, what is the overall percent profitability of the system, and how many losing trades in a row does the system typically take? A low probability system that can lose multiple times in a row, you have to trade really, really small. But a high probability system, something that wins, let's say 70% of the time, or even more than that, that has, maybe, let's say something like breakout, betting on a breakout in leg one, betting on a second leg after a breakout that was the first leg. In other words, fair breakout, the odds are really high, you're going to get a second leg down. Something like that. So selling the close of 12, or even selling the close of 9, that's a breakout. Leg one, it's probably going to get a second leg. That's a high probability trade. And the odds are, it should work. My preference is, let me back up. As far as what you should risk in terms of percentages, I think most traders should keep their risk under 1% until they've been consistently profitable for some time. So, in other words, never risk more than 1%, or never risk more than maybe 1.5%. And that's total risk on the trade. That is open profit to your stop. That includes that. So that's the market price to your stop. If I sell the close of 7, I sell the close of 8, stop above 7, and the market's all the way down here, my risk is now the close of this bar to wherever my stop is. And yes, that would include open profit. But in general, the lower the probability and more frequent the losers, especially in a row, the less you can risk. A really, really good trading system or method would be one that has a higher winning percentage and that has a high recovery. And what a high recovery factor would be, basically what that means is if I take my worst loss, and let's say in general it takes 3 trades to make it up, worst case, and the odds are low that I'm going to lose more than 2 times in a row, that'd be a really strong trading method. And that could obviously risk more than something that's 40%. How do you avoid picking wedge bottoms that fail? Well, parabolic wedges are minor reversals because they're breakouts on higher time frames. So all these wedges on the way down, they're all minor, and the odds are they're going to lead to a trading range or a trend continuation. Okay, question? That's more of a thank you. Okay, question. Yesterday in the review, you mentioned sellers above bar 31. Okay, question. Yesterday in the review, you mentioned sellers above bar 31. Suspect buyers below, sellers above. Okay, let me just go to bar 31 yesterday. Yesterday in the review, you mentioned sellers above. You mentioned sellers above bar 31 here, and buyers below. Okay, let me just restate it this way. I'm not exactly sure. I think you might have the numbers mixed up, but I think what you're asking is, yesterday you mentioned that there were sellers above 30 and buyers below 31. Can you explain why? The reason was strong enough breakout, 29.30. 30 is a bad sell, is a bad buy above, so I thought sellers above 30. However, because we triggered a buy on 30 and we're at support, it's a low one short below 31, so I thought buyers below 31, and that is why I thought sellers above and buyers below. Typically, whenever you get a stop entry that like whenever you have a limit order trade, let's say. So for example, when you have a low one, 31, let's say, it's a stronger buy below the bar if the prior bar triggered a stop entry. Because if we trigger a stop entry above 30 on 31, it's increased the probability that there's buyers below the 31 low. The question, is it only because the daily chart looks, question, why did I think the daily chart is going to have a tail? Yeah, I thought the daily chart would have a tail below the bar just because most days don't close on their lows. Plus, this is in the middle of an overall trading range. So it really wasn't all that great of a bar to be, and so the context is bad on the daily chart. Big bar, big risk, bottom of the trading range, increase the probability of more sideways trading. That's why I thought today would have a tail below it. Plus, in general, usually you don't get a bar. You don't get something that closes on its low. So where do we go tomorrow? Bears, they want tomorrow to have another strong follow-through day. But I think the problem is, we'll still probably get a second leg down from the sell-off in July. But we're in a tight trading range, and today is forcing traders to sell at the bottom of that tight trading range. And that lowers the probability for those bears. Big bar, big risk. So we may get a deep pullback or a disappointment bar tomorrow, but we'll see. Okay, thanks everyone for watching, and I hope everyone has a good rest of their evening. And if for those of you that have not subscribed to the trading room, or anyone that is subscribing, you may have to give the trading room admin a little bit of time, the one who's in charge of it, to get the link established. So if you go to the website and you don't see a sign up link yet, just wait a couple hours and check back again. Okay, thanks everyone for watching, and I hope everyone has a good night.